The committee will come to order. I want to thank the members for their patience this morning. We're in the process of reorganizing the Democratic caucus, and so I don't know how this is all going to work out, but we're going to get started. Without objection, the chair is authorized to declare recess of the committee at any time. This hearing is entitled Boom and Bust: The Need for Bold Investments in Fair and Affordable Housing to Combat Inflation. I now recognize myself for 4 minutes to give an opening statement. Good morning, everyone. First, I'd like to say that I'm incredibly proud that this committee has made it a top priority to ensure every family has access to fair and affordable housing across the country. Since becoming chair in 2019, the committee has held 55 hearings on housing, including the first ever full committee hearing on homelessness. However, the opposite side of the aisle have repeatedly complained about our focus on housing while offering no solutions to safely and affordably house families. With Republicans holding the majority next Congress, this will likely be our last hearing on housing affordability for the foreseeable future. But I know the ranking member is a good person, so I hope he will prove me wrong. Unfortunately, our nation's housing crisis is getting worse. Some believe that robust federal investments in fair and affordable housing aren't needed, but that deregulation and the private market alone will solve this crisis. But decades of dismal federal investment in housing have landed us in the current housing crisis, and we cannot expect different outcomes without different interventions. Today, there's no metropolitan area in the country where families can afford a home making minimum wage. A chronic undersupply of housing has led to skyrocketing costs, and today, housing is a primary driver of core inflation. While the Federal Reserve has leaned on interest rate hikes in hopes of curing inflation, including 4 supersized rate hikes this year alone, those hikes do nothing to address the fundamental shortage of affordable housing and, in fact, make it worse. These hikes have made lending more costly, pricing first-time and first-generation home buyers out of the market to record lows by adding to the already high costs of purchasing a home. Housing construction has also slowed due to increased lending costs, exacerbating the existing supply shortage. The Fed cannot address inflation alone. That's why last year, my committee fought to secure over $150 billion in fair and affordable housing investments in the House, which would reduce core inflation by addressing the root cause of our inadequate housing supply. These investments are estimated to create more than 1.4 million affordable homes, help 868,000 families lower their housing costs, and create jobs that will boost local economies. Without these target investments, we will never fully address housing inflation. Instead, we will continue to face a homelessness crisis and skyrocketing rents, and home ownership will move further out of the reach for everyday people, while private equity firms and banks like J.P. Morgan Chase gobble up more and more homes for profit. We need bipartisan support for bold investments to make housing affordable and finally rein in core inflation. With that, I'll yield back, and I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes.
Thank you, Madam Chair, and we will certainly, with the incoming Republican majority, prioritize housing and financial stability next Congress, and put a great emphasis on that. And it's our hope that we can actually achieve some bipartisan results in the world of housing in a way that this committee hasn't done over, well, actually probably as long as we've both served on this committee, unfortunately. but not for lack of trying. But our hope is that we can work together and get something done. But for this hearing, I'm grateful that my colleagues across the aisle they're finally ready to talk about inflation and how to combat inflation. Committee Republicans have consistently taken every opportunity to discuss the skyrocketing prices clobbering American families. For more than a year, Republicans have been sounding the alarm about Democrats' reckless fiscal agenda and its impact on households and job creators. Democrats chose to ignore those warnings. Republicans said that a massive $1.9 trillion spending bill would wreak havoc on our economy, and Democrats doubled down with even more spending. Republicans offered simple amendments to the Democrats' partisan bills during our June markup this year to actually address the inflation crisis, and the Democrats rejected each one. So I have to say today's hearing is simply too little too late. Since Democrats took control of Washington, the cost of everything has gone up. Food, energy, health care, and yes, housing, the topic of this hearing, are all much more expensive today than they were just 2 years ago. Rather than focus on the rising cost of housing, Democrats continue to turn on their tired old playbook of policies that actually make the problem worse, not better. These are policies such as the Down Payment Assistance Program and the numerous other programs included in the Democrats' doomed Build Back Better Act that throw hundreds of billions of dollars into ineffective housing programs. While well-intentioned, these would do nothing to help lower the cost of housing or increase our housing supply. Those are the things we need to address. To find real solutions to bring to this housing crisis, we need to take a step back. Consider this: the average 30-year fixed mortgage rate from June 2009 until the end of 2021 was 3.97%. Today, that same mortgage comes with a rate approaching a whopping 7%. Whopping in comparison to the last decade, historically, not whopping. The speed and the magnitude of this increase is without comparison in history. These are, so there's that. Then there are two main contributors to this problem, this housing problem. First, Democrats' fiscal policies and regulatory policies are discouraging new home building. We know that artificial local barriers to construction, such as restrictive zoning ordinance and overly burdensome regulations, play a significant role in limiting new construction. A limited supply of something coupled with increased demand always leads to higher prices. Higher prices require larger loans, making it less affordable for families. The second contributor is our current environment in which the Fed must tighten its monetary policy and reduce its balance sheet to fight out-of-control spending. This causes mortgage rates to increase, making them more expensive and riskier. Economists are rightfully concerned about the effect of quantitative tightening on the housing market. The $35 billion per month in agency mortgage-backed securities are rolling off the Fed's balance sheet. It takes money out of the housing market, limiting the availability of credit. We know the Fed's tools to address runaway inflation are blunt, but they are necessary to stabilize the economy and return to normal credit environments. As lawmakers, we should do our part to assist in this effort to bring down prices. That means reining in spending and practicing fiscal discipline. Doubling down on failed housing policies is not the answer. We need innovative solutions. Thank you, Madam Chair. I yield back.
Thank you. Thank you, Ranking Member McHenry. I now recognize the Chair of the Subcommittee on Housing, Community Development, and Insurance, the gentleman from Missouri, Mr. Cleaver, for 1 minute.
Thank you, Madam Chair. Gas prices fell this week to a national average of $4.67, which is 12 cents lower than it was last week. So inflation is coming down, but nevertheless, we do have inflation and elevated consumer prices, which are hitting our people in this country. The impact of inflation is felt particularly hard among low and moderate income Americans who have tight budgets and lack discretionary income. However, as much as we are concerned about prices, we must not forget that housing is the single largest expense for American families. Rents are 22.8% higher in the 50 largest cities than 2 years ago, with some hikes far exceeding what is reported in the Consumer Price Index. In some cases, hundreds or thousands more. The lack of housing stock has driven up the prices, and the Federal Reserve's rate hikes do nothing to alleviate housing inflation. Bringing down inflation under control and addressing the impact of inflation on American families begins and ends with the housing crisis. Thank you, Madam Chair, for your leadership in holding this hearing today, and I yield back.
Thank you, Mr. Cleaver. I now recognize the ranking member of the Subcommittee on Housing, Community Development, and Insurance, the gentleman from Arkansas, Mr. Hill, for 1 minute.
Thank you, Madam Chair. Americans continue to fall behind because of Biden inflation, and their paychecks are worth less every month. Working Americans in Central Arkansas and across the country are getting fleeced. So I'm glad the majority has finally decided to hold a hearing on combating inflation. Wasteful spending, productivity-killing regulations, and overly accommodative monetary policy have led to a 40-year high in inflation. So it doesn't make a whole lot of sense to me why the majority keeps noticing bills that will make inflation worse and put home ownership further out of reach, like the noticed Down Payment Toward Equity Act. Today we'll hear from some of our witnesses advocate for tempting ideas like rental or down payment assistance, but doubling down on failed housing policies won't make housing more affordable in America. I've said it before, I'll say it again. Federal housing policies only subsidizing demand but don't address barriers to supply will never make housing more affordable. I yield back.
Thank you very much, Mr. Hill. I want to welcome today's distinguished witnesses to the committee. First, we have Nikita Bailey, who is the Executive Vice President of the National Fair Housing Alliance. Next, we have Margaret Eady, who is an activist and housing seeker. Next, we have Michael Mitchell, who is Director of Policy and Research at Groundwork Collaborative. Next, we have Mark Zandi, who is the Chief Economist at Moody's Analytics. And finally, we have Douglas Holskin, who is the President of the American Action Forum. Without objection, your written statements will be made part of the record. You will have 5 minutes to present your oral testimony. You should be able to see a timer that will indicate how much time you have left. I would ask you to be mindful of the timer so that we can be respectful of everyone's time. Ms. Bailey? You're now recognized for 5 minutes to present your oral testimony.
Good morning, Chairwoman Waters, Ranking Member McHenry, and other distinguished members of the committee. Thank you for the opportunity to testify at today's hearing. I am Nikita Bailey, Executive Vice President of the National Fair Housing Alliance, the only national civil rights organization dedicated to eliminating housing discrimination and ensuring equitable housing opportunities for everyone. NAFA's Tech Equity Initiative creates fairness and transparency and algorithms to stop technology from recycling discrimination. Rising housing, gas, and food costs are the main drivers of inflation, but housing costs are the key driver. Home prices rose 10.4% in 2020 and another 18.8% in 2021. Rental housing prices rose 17.6% in 2021, far outpacing income increases. The Consumer Price Index rose 7.9% in the last year, the highest increase since 1982. Housing costs accounted for more than 40% of the increase in the core inflation rate. Despite the Federal Reserve's quantitative easing, these trends are not slowing down. Housing continues to be the single largest expense for the average consumer, with shelter accounting for 33% of the CPI. While rental inflation is lessening, as of October 31, 2022, Americans paid an average of $2,040 market rent. There continues to be no city in our nation where someone making the minimum wage can afford to live in a 2-bedroom apartment. It could take as long as 2023 for housing changes to be felt by consumers, and high inflation is likely to last through 2024. The Federal Reserve lacks the tools to address housing's inflationary impact. Low housing inventory, record competition from corporate cash investors, restrictive zoning ordinances, supply chain disruptions, rising building material costs, and labor shortages are all driving prices higher. While carefully weighing anti-inflationary measures, the Fed's actions did not prevent the housing market from entering into a recession. Mortgage rates returned to well over 7% and dampened home sales. As of September 2020, pending home sales were down 10.2% month over month, with a decline the most acute in the Northeast. Investors are locking out first-time home buyers, many millennials, from Charlotte, North Carolina to Boise, Idaho. Further, there is a shortage of 7 million rental homes affordable and available for extremely low-income renters. There is great irony in passing the Inflation Reduction Act without a single penny for fair and affordable housing, when every economic indicator has shown the direct connection between housing and inflation. Congress and the Biden administration are equipped to mitigate housing's outsized role in inflation, and voters are demanding action. Americans support major investments to build safe and affordable housing, even if it would grow the national debt, mean raising taxes, or cutting spending in other areas to pay for it. Voters want the federal government to address high housing costs with bipartisan legislation that grows the supply of homes, improves housing affordability, and provides rental and down payment assistance. During the recent midterm election, voters approved capping rate increases on rent and ballot proposals to fund and authorize affordable housing construction across the country. Making key, impactful demand-side investments and supply-side subsidies that prioritize fair housing will help to drive down housing costs while growing the economy. It is critical to embed fair housing in every action. As a nation, we have tried and failed to create affordable housing opportunities by implementing federal housing policies in discriminatory ways that entrench residential segregation. The root of discrimination in housing are deep, pernicious, and persistent. Past race-conscious housing policies, banking, and other practices favored whites, creating today's structural inequalities. By contrast, the equity-based provisions in the American Rescue Plan Act help to stave off another foreclosure-induced recession. The Great Recession robbed Black and Latino communities of $1 trillion in wealth before the Fed's COVID-19 interventions exacerbated racial inequality. The Black-white wealth gap has grown by $20 trillion, with inequitable housing policies driving the disparity. Why would we want to go back? The nation needs a comprehensive housing strategy rooted in equity. Equitable policies advance opportunity for everyone and create an economy that works for all. Priorities for funding must include critical support for local fair housing enforcement agencies that fight over 4 million incidents of housing discrimination, mostly in housing and rental. First-generation DPA, the Neighborhood Homes Investment Act, and increased support for vouchers for families with children, and support for Native communities, older Americans, and people with disabilities. Thank you.
Thank you, Ms. Bailey. Next, we will go to Ms. Edie. You are now recognized for 5 minutes to present your oral testimony.
Good morning. My name is Margaret Edie. I am from Hampton, Virginia. I am grateful to the Office of Representative Maxine Waters for providing me an opportunity to speak to you today. The topic of this hearing, fair and affordable housing, is personal for me, and that's because my husband and I currently live in our vehicle. There are so many other things about me I'd rather be sharing with you today. I'm a visual artist who paints beautiful abstract paintings, a former librarian. I'm an advocate for other parents like me who have been impacted by gun violence. By being homeless, it steals your identity. People like my husband and I need stable housing first before we can accomplish our full potential. So today, I wanted briefly to share our housing story with you. Our experience has also brought us into contact with other families who are facing similar challenges, and I hope to speak up for them as well. When the pandemic hit in 2020, my husband saw his hours cut in his job hauling trash to the landfill. We fell about $150 short on our rent. Instead of working with us, the landlord evicted us. My husband and I decided to move into our vehicle while we searched for other places, but soon we found out the barriers to finding a home were very steep. Whenever my husband and I would speak with rental offices, I would give them my name. They would type my name in some sort of data system and then tell me, "We see an eviction on your public record and we cannot help you." My husband and I were able briefly to find a place to live after our story received news coverage. We received support from kind individuals on GoFundMe. But this year, after that attention faded, our landlord chose to do what many landlords have done recently. They failed to renew our lease after it expired, and they increased our apartment's rent beyond what we could pay. So for the last 4 months, my husband and I have been living in our car again. In the parking lots where we sleep and in homeless agency where we visit, I have met many other homeless families. It hurts so bad to see moms and dads out there with their kids. The dads look like their pride was stolen away from them. And when they tell you their stories, they will tell you that they would turn the world upside down because their rent went up by even just $50 or $60 more, and they couldn't afford that. Even if an apartment were to be offered to us, the deposit and income requirements are so high, a landlord typically asks for 3 times the rent up front. $3,000, for example, for a place that rents $4,000. We don't have that. Landlords can also require you to show that you make 3 times the monthly rent just to qualify. We can't show that. All of this makes people in our situation more vulnerable to any landlord who will accept you, even if they overcharge you and provide unsafe conditions. When people have stable housing, it allows them to do so much more in life. I know that it's hard for a member of Congress to imagine yourself living in your car. It was hard for my husband and I to imagine ourselves in this situation, but I'm asking you today to imagine yourself in our situation. You don't know how good it is to have a knob to turn every evening, to enter a space where you're safe and not in danger, until that is taken away from you. There are a lot of people out here that if they had safe, affordable housing, and if they could stay in it until the day they die, that would be something that they really do desire. Anything that you can do to help make this a reality would make mean a lot to people. Thank you.
Thank you so very much for your testimony. Next, we will go to Mr. Mitchell. You are now recognized for 5 minutes to present your oral testimony.
Thank you. Thank you, Chairwoman Waters, Ranking Member McHenry. Thank you for inviting me to testify today. My name is Michael Mitchell, and I'm the Director of Policy and Research at the Groundwork Collaborative, an economic policy think tank based in Washington, D.C., dedicated to broadly shared prosperity and abundance for all. My testimony today will focus on 3 key points. First, the Federal Reserve's actions to combat inflation are driving up rents as high interest rates increasingly price people out of the home buying market and further crowd the rental market. They are also exacerbating the long-standing housing crisis by dampening sorely needed investment in new construction. Second, the Federal Reserve's aggressive interest rate hikes risk undermining a strong labor market and pushing our economy towards a recession. These actions are coming at great cost to workers and families across the country, particularly the most vulnerable. And third, policymakers have the tools at their disposal to build a more resilient and equitable housing sector. To my first point, the Federal Reserve's actions to combat inflation are driving up rents and dampening sorely needed investment in new housing construction. The Federal Reserve has raised interest rates 6 times so far in 2022, including 4 interest rate hikes of 75 basis points. As the Federal Reserve continues to raise interest rates, other rates, such as mortgage rates, follow suit. The average 30-year fixed mortgage rate across the U.S. is above 6.5% and near 15-year highs. As the cost of buying a house becomes more expensive, potential home buyers are forced to remain in the rental market where there are already too few rental units to meet demand, putting upward pressure on rental prices. The most recent CPI report for October revealed that rent prices have gone up 7.5% year over year, the highest rate in over 40 years. Federal Reserve action also undermines private sector investment in housing construction as the rising cost of borrowing makes such construction more costly and less profitable. In recent months, we have seen declines in permits for single-family home construction and single-family housing starts. The Fed-induced slowdown in the housing market will only exacerbate the 4 million unit deficit in housing that predated this inflationary period. Second, the Federal Reserve's aggressive approach to interest rate hikes risks undermining a strong labor market and harming marginalized workers, while large corporate landlords use this moment to push up rents and boost profits. Thanks to timely actions taken by the Biden administration and Congress, we have experienced one of the strongest post-recession recoveries on record. However, this recovery is in jeopardy because the Federal Reserve's aggressive interest rate hikes. In recent months, job and wage growth have slowed, and broad range of experts from Nobel Prize-winning economists to financial analysts have started to sound the alarm about how the Federal Reserve interest rate hikes could throw us into a devastating and totally avoidable recession. A recession at this moment would be particularly damaging to marginalized workers, workers of color, workers with disabilities, women in the labor market, as discrimination in the labor market means these workers are last to benefit from a strong economy and the first to suffer in a recession. Yet despite the significant threats that the Federal Reserve's interest rate hikes pose to economic security for millions, many of which are renters, large landlords have seen this moment as an opportunity to raise rents by as much as they possibly can. These companies have been very explicit about the fact that the Fed's actions have given them cover to raise rent more than overall inflation in order to pad their own pockets and those of their shareholders. On earnings calls, they have been forthright with shareholders about their ability to raise rents with zero concerns for tenants. So what is to be done? While the Federal Reserve may be exacerbating the rent affordability crisis, there are a number of actions that Congress can take to address the growing cost of rent while also tackling key underlying factors to ensure adequate affordable housing into the future. For immediate impact, Congress can protect renters from burdensome rent increases in homes with federally backed mortgages, tackle corporate profiteering in the housing sector, and make investments in helping families afford housing. And for the longer horizon, Congress can make public investments geared toward boosting the housing supply and work with municipalities to adopt new forms of zoning regulation that would enable an increase in the supply of affordable housing. The Federal Reserve's actions to combat inflation are driving up rents and exacerbating a housing crisis that threatens the well-being of millions of families across the country. Congress will need to act to ensure that struggling families have access to quality and affordable housing. In the long run, public investment in boosting housing supply will be critical to building a housing sector capable of meeting our country's needs. Thank you, and I look forward to your questions.
Thank you very much. Next, we will go to Dr. Holtz-Eichen. You are now recognized for 5 minutes to present your oral testimony.
Well, thank you, Chairwoman Waters, Ranking Member McHenry, and the members of the committee for the privilege of being here today. I want to make just a couple of simple points, and then I look forward to your questions. The first and obvious thing is that housing is central to inflation that is at 4-decade highs, and also to efforts to control that inflation. As the committee well knows, measured year over year inflation, CPI inflation in the most recent report was 7.7%. But I think the more striking number is that if you look at the bundle that is food, energy, and shelter, that is now rising at 9.5% annually, down a bit from the 10% earlier, but still every family, when they fill up their car, go to the grocery store, and then go home, is reminded of the erosion in their standard of living coming from this inflation. Of that bundle, shelter stands out as the most important. Shelter inflation is now 6.9% year over year, up from 6.6% the month before, and indeed has risen every month since early 2021, has shown no sign yet of peaking, and that puts the Federal Reserve in a great dilemma. If shelter inflation is at 6%, and it's a third of the CPI, the only way the Fed can hit a 2% target is to have everything else be zero. That's not going to happen. And so getting housing inflation under control is central to success in returning to a price stability mandate for the Federal Reserve. So as a direct matter, the Fed is going to have to focus on housing. As an indirect matter, the housing market is an important conduit for monetary policy. If mortgage rates are higher and people want fewer mortgages, they're going to buy fewer homes, they're going to build fewer apartments, and we will put in those fewer homes and fewer apartments. We're not going to put in furnaces, we're not going to put in refrigerators, we're not going to carpet them, and the Fed's actions will have a broad cooling effect on large swaths of the economy. And so as a conduit, the housing market is going to carry an especially large burden in controlling inflation. This Fed strategies will make that burden even larger because, as the ranking member mentioned, the Federal Reserve has gone from buying $30 billion a month in mortgage-backed securities to unwinding $35 billion a month in mortgage-backed securities. That's a $65 billion a month swing, roughly a fifth to a quarter of normal mortgage finance, and puts extra pressure on access to capital in the housing sector. And so we're going to see a Federal Reserve that needs to control housing inflation, and its procedures will indeed target the housing sector disproportionately. All this, sadly, this tightening cycle comes at a time when there were record low vacancies in the rental market, record low inventory in the owner-occupied sector. And so we once again learn the lesson that if you let inflation get embedded into the economy, you have no good choices. You either live with the inflation, which is untenable in most people's minds, or you have to undertake actions which seem at odds with your other goals. And that is the position that we find ourselves today. It is unsurprising to me that in those circumstances, there will be calls for additional assistance into both rental and unoccupied housing, and you're hearing those calls today. I would say two things about that. The first is they're unlikely to succeed. The Fed's goal and its necessity is to cool the housing market and then not allow housing demand to continue. Adding more demand subsidies will simply be counteracted by a higher and more aggressive Fed of necessity. So it's not going to be effective at this point in time. And the historical record on demand subsidies is not exactly a sparkling one. Housing was at the center of the 2007-2008 financial crisis and the Great Recession. That was a tribute to the housing GSEs, Fannie Mae, Freddie Mac, long-standing subsidies to owner-occupied housing, placed the taxpayers at tremendous risk, fed an unwise credit boom in the housing sector, and ultimately led to enormous losses in personal wealth across the economy. Since then, nothing has changed. The GSEs remain in conservatorship, they are undercapitalized, and they are back to their traditional mission creep of finding additional ways to subsidize housing when it is proven that that's an unwise course and not going to be effective. And so I would encourage this committee to look at the other side of the market, look at the supply side, and find effective ways to deal with the chronic undersupply of housing, not repeat failed demand stimulus. Thank you.
Thank you very much. I will now call on Dr. Zandi. You are now recognized for 5 minutes to present your oral testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, and other members of the committee. Thank you for this opportunity to participate in today's hearing. My name is Mark Zandi. I am the Chief Economist of Moody's Analytics. I'm also the lead director of Reinvestment Fund, a large CDFI, and I'm on the board of directors of MGIC, which is one of the nation's largest mortgage insurers. The views I'm expressing here today are my own. I'll make 4 points in my remarks, and they echo many of the remarks made by the other witnesses. First, it's clear American households are struggling with the hit to their purchasing power from the very high inflation. Prices are rising quickly for many goods and services, gasoline and food, new vehicles, and of course, housing, the subject of this hearing. Just to make that point concrete, the typical American household making the median income has to devote $433 more per month to purchase the same goods and services that they were buying this time last year because of the high inflation. Clearly, for someone making $70K a year, that's financially overwhelming. Second, there is a long list of reasons for why inflation is high. I'd put at the top of the list the Russian invasion of Ukraine and the resulting surge in oil, natural gas, agriculture, and other commodity prices. The pandemic is still creating havoc, as we can see in China, to global supply chains, into the labor market, and of course also the affordable housing shortage, which has been building since the great financial crisis back over 10 years ago. In fact, I estimate that the shortfall in housing at this point is about 1.6 million homes, which is about 1 year's worth of new construction at the current pace. This shortfall has been long in the making. It is behind the very high house prices and rents that we're struggling with, and it is key to the inflation that we're suffering through right now. As others have pointed out, housing accounts for 1/3 of the consumer price index, and it's accounting for over a percentage point of inflation. And given the Federal Reserve's target 2%. That gives you a sense of how daunting this is. My third point is that the Federal Reserve really does not have the policy tools needed to address the shortage and to quell in its efforts to quell inflation, while I think appropriate by raising interest rates, are adding to the cost of housing services. The higher mortgage rates resulting from the Fed tightening is undermining the affordability and the demand for home ownership, and thus causing more people to have to rent, and that's causing rents to rise and adding to the cost of housing services. And also, I think less appreciated, the higher cost, the lending rates for new construction does weigh against new building for multifamily units, for single-family rental, and that reduction in supply is also adding to rents and housing costs. And this leads to my final point, because of the inability of the Fed to address this issue. It's up to Congress and the administration to adopt policies to help alleviate the shortage on improved supply to help rein in the inflation. These policies can include a range of things: tax breaks, grants, access to less expensive capital, also critical incentives to get local decision makers to ease zoning rules and restrictions on development. And now, grants tend to close the economic gap for local governments and philanthropies to build and renovate housing, and tax incentives tend to close the gap for private businesses to do the same. But most immediately, I think I would focus on the tax-related policies. They think it can work quickly to increase housing supply, which has to be the focus, and bringing private capital to bear to address the affordable housing shortfall will be needed to bring it to scale and to help over the longer run, because even on the other side of the pandemic and its effects, the housing shortfall is going to be significant and add to inflationary pressures. So the affordable housing crisis is a serious problem. It is driving up the cost of housing and home ownership, putting upward pressure on inflation that will be long with us. It's a pernicious problem, but fortunately, there are policy solutions to this problem that make good economic and political sense. I look forward to your questions. Thank you.
Thank you so very much, Dr. Zanzi. I now recognize myself for 5 minutes for questions. Mrs. Edie, I want to thank you so much for appearing here today to share your very difficult story with this committee. And I'm also very saddened that your experience is one that is shared by millions of families all across this country, especially among that is, low-income families and people of color. No one should have to rely on GoFundMe to afford a roof over their head. Now, we throw, around large amounts of money in our conversations. We talked about millions and billions and trillions. And so, could you just talk a little bit about what something like $150 billion in fair funding for affordable housing investments would do for you and your family and for those in similar circumstances? Would it make a difference in your life? What would it do for you?
Of course, it would make a difference, Representative Ms. Waters. Just a little tad bit of that, like one little drop of that money could change not only my life and my family's, but a lot of families' life. That money could turn around give us back our identity and our dignity. It's just like to feel safe again, to feel like we're human again. Because when we're out here being homeless, it's just like everything is stripped away from us. It's like we don't see no end to it. But if we did have funds to help us, it would change our whole perspective. It would give us back our identity. It'll give us our place back in society where we won't feel like we're the bottom of the barrel. It will give us just a safety net where we can feel as though we can accomplish things, because if we have to constantly worry about having a roof over our head. We don't have time to adapt or trying to even put towards, is there any hope to get housing? So I feel as though, yes, the money would be something that could really help us bring back not only our identity and our self-worth, it'll be something that would definitely help us go towards trying to make ourselves be better in the future. So having the resources to be able to get affordable housing would be just like an asset to us.
Thank you so very much. Dr. Zandy, can you tell us what robust federal investments in affordable housing like those that we had in Build Back Better, that we passed through the House, would mean for inflation and the economy overall?
Well, Congresswoman Waters, I think they would be very positive because they were entirely focused, almost entirely focused on the supply side of the housing market. And the lack of supply that's been developing since the financial crisis over a decade ago is the key reason for the surge in house prices and rents that are adding to the inflationary pressures that we're suffering through right now. So those various grants and tax breaks that were provided in the Build Back Better plan to increase supply would address that question. And those programs are already in place. Those tax breaks are already in place. They're tried and true. They're not perfect, but they do work, and many of them do work very, very quickly and can help increase the supply of affordable rental, particularly affordable rental housing in the next 12, 18, 24 months when, obviously it's going to be very critical that we get inflation back in. And housing cost inflation, as has been pointed out, very key part of overall inflation. So getting rent growth slowing and down, that'd go a long way to getting inflation back into its box and allowing the Fed to bring down interest rates, which of course would be critical to making sure the economy can get through the next 12, 18 months without going into recession. So I think of all the policies in Build Back Better, the housing-related supply-side policies, particularly important to addressing the high inflation that we're suffering through at this point in time.
Thank you very much. And now the gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee, is now recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Holtz, Dr. Holtz-Eakin, so we have inflation that we haven't experienced since the 1970s. Like the Carter administration, the Biden administration has exacerbated price instability and the cost of consumer goods going up. And that's been exacerbated by federal spending. Obviously, the Fed has a certain role in monetary policy, but the fiscal house has a key ingredient to the experience that we have here in the United States, pre-Ukrainian invasion. So can you explain how massive spending bills impact inflation, price instability, and thereby housing prices as well?
Well, certainly in 2021, we saw a 6 percentage point increase in consumer price inflation in the U.S. That's only happened 3 times. The first time was in 1952 when the U.S. economy was growing rapidly, 10.5%, pretty big number, and the federal government increased its spending by 50% to prosecute the Korean War. Big federal spending in a hot economy, consumer price inflation jumped right up. Fed did nothing to offset it. That's exactly what we saw in 2021. The $1.9 trillion American Rescue Plan was about a 50% increase in typical federal spending. Fed did nothing to counteract it. We saw a big jump in inflation in 2021. I think that's unquestionably a big root of the current inflation problem. The other episode is illustrative as well. That's 1974 with the OPEC oil embargo. Global oil prices quadruple overnight. That cost pressures in every business in America gets passed on to consumers. And we saw supply chain issues. Those are certainly part of the inflation story, but they're not all of it. That excessive federal spending, excessive stimulus produced demand across the board and rapid increases in prices.
So we see FHFA in response to the housing price, substantial change in housing prices, and because of a change of administration, they've raised the statutory limit for the maximum size of mortgages that Fannie and Freddie can buy. And now you have government-sponsored enterprises are enabling the financing of mortgages on homes sold up to $1,089,300 in some places across America. So translated, taxpayers will now be on the hook to guarantee $1 million homes in places like California, New York, and D.C. suburbs. Housing experts like former FHFA Director Ed DeMarco have observed that, quote, excessively high loan limits exacerbate the affordability crisis, end quote. Do you agree with Director DeMarco that this is that something's not right here?
I do. We've seen the track record of demand subsidies exacerbating high prices because of the inadequacy of supply. These are especially poorly targeted demand subsidies. They're $1 million homes. We're not exactly targeting those subsidies toward those who are most in need. And so it's the worst of both aspects of that policy.
Okay, so to address inflation, what should Congress do?
First, it should not exacerbate the problem. I mean, that's the number one thing that a future Congress could do, is not put the U.S. in this position again. As I mentioned, now that inflation is entrenched, there are no good choices for combating it. And so don't put the U.S. in that position again by having fiscal policies that add up and don't exacerbate demand in an excessive fashion.
And if Congress could do one or two things on housing to increase the affordability of housing supply, enhance the supply of housing, what would you say?
I'd echo some of the things that Mark Zandi said, which is a carefully thought out long-term plan to increase supply is the key. A rapid response, trying to sort of solve this problem overnight, really just produces a huge construction boom and exacerbates the inflation problem. This is the wrong time for that. So have a patient strategy that's going to increase the supply of rental, especially housing in the United States.
So a long-term approach to
Yes.
a long-term problem.
Yes.
Mr. Zandi, do you agree?
Yeah, I'd focus on the supply side here in the immediate future. And I do think the tax incentives that I mentioned in my remarks would be particularly effective in the near term. LIHTC, Low-Income Housing Tax Credit, Neighborhood Home Investment Act tax credits, new market tax credits. These are things that the infrastructure for getting that capital out into the marketplace is already there. It's well functioning. The administration is making tweaks to these programs to make them more effective. Congress is passing legislation or proposing legislation to make them more effective.
Yes. Thank you for your
Developers are
testimony.
good for it.
Thank you for your testimony.
Thank you.
And thank you, Dr. Holtzigen.
Thank you very much. The gentleman from Georgia, Mr. Scott, who is also the chair of the House Agricultural Committee, is now recognized for 5 minutes.
Thank you very much, Chair Lady. About 10 years ago, the U.S. Department of Housing and Urban Development estimated that we in Congress needed to spend $26 billion on construction projects for repairing the nation's stock of aging housing. Unfortunately, Congress didn't do anything about that. After years of failing to address this problem, the current backlog of unfunded capital projects has now ballooned to an estimated $80 billion. These types of projects include things like repairing damaged roofs, replacing broken heating and air conditioning, and reconstructing aging sewage lines, critical repairs that also affect the health and the safety of 1.2 billion families who are living in public housing units. And so, Mr. Bailey, I want to ask you, how do we get into a situation where we have an $80 billion backlog of public housing construction and projects? And specifically, how many public housing units are lost each year to this backlog? And Miss Bailey, I want to express to you, I'm very concerned about this. Public housing is how I got my start in politics. I represented all the basic large public housing in Atlanta as I launched my political career, so I'm very concerned about it. How many public housing units are lost each year to this $80 billion backlog? This is a major national issue.
Thank you so much for the question. I agree with you. Even before this crisis, families were struggling and our infrastructures were struggling. We have a massive underload. We are not properly resourcing the communities that have been locked out of opportunity for the entirety of our nation. We have constantly relied on affordable housing without rooting it in fair housing to lead the nation forward, exacerbating inequality. So we need a ton of investment, as you outlined, to address the public housing deficiencies all over our country. And what is important about using those resources to affect those deficiencies is the reality that the courage that Mrs. Edie used today in being here gives us an opportunity to help families just like hers have the God-given human dignity restored that they desperately need.
Right, and excellent answer. And we've got to draw more attention to helping those. It's public housing. That means it's congressional housing. It is what we in the public sector, and which is the federal government, which is HUD. This is our challenge to do. And so my second question to you is, from what I understand, public housing authorities are not required to submit capital needs assessment for what projects need repair. I mean, you can't repair projects if you don't need which ones to repair. If that is correct, how does HUD keep track of the number of backlog projects, please?
I'd like to follow up to you.
Ms. Bailey, if you could answer that.
I'd like to follow up to you with a written response. I would say we have to make sure HUD is adequately funded because part of the challenges is that it lacks the technology and staffing people that it needs to effectively operate. HUD was massively defunded by the former administration, and we have to right now make sure HUD has every resource to continue to do all that Secretary Fudge is doing to address our nation's affordable housing crisis.
And do you know that there are people who started out in the public house and they're out there sleeping on the streets? I mean, in my district in Georgia, and we've been helping them. We've been saving them, and Mr. Waters and I and this committee have put together housing assistance, helping them with just the running water. Thank you, Madam Chairman, but this is a serious issue.
Thank you very much. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Thank you very much, Madam Chairman. Mr. Mitchell, I'd like to, if I could quickly go through a quick discussion with you. Do you work well with the Department of HUD?
Organization does not work with.
I'm sorry, I could not hear you.
Our organization does not work with the Housing and Urban Development Department.
I don't know, could you hear that answer? Said no. Okay, thank you very much.
Speak right into the microphone clearly so that they can hear you.
Our organization does not work with the Housing and Urban Development Department.
Okay. I've tried, and we have had at least once a hearing with Secretary Fudge, HUD. Today, we've heard our young chairwoman say Republicans offered no solutions to try and fix the housing crisis. Today, we heard that a blame game for there's not enough money, funding. But, Madam Chairman, I'd like to enter into a record a series of letters
Without objection, such is the order.
about discussions that people back in Texas have had with not only Secretary Fudge that was very unsuccessful, but also from her organization on issues related to North Texas having an excessive number of people who are without housing. And the executive director of the Dallas Housing Authority, Mr. Troy Broussard, had been working for quite some time with local advocates, people who wish to come in and provide affordable housing and to do these things because they saw firsthand the problems in North Texas. As you know, Texas is growing, North Texas exponentially growing. And a series of letters, conversations, including with a senior member from North Texas, Chairwoman Eddie Bernice Johnson, and myself were completely unsuccessful in attempting to even get HUD, including a letter from and work with Mr. Broussard, Executive Director, Dallas Housing Authority, to get HUD to even respond properly. And they came back and by and large gave excuse after excuse after excuse, saying a waiver would be too complicated for Dallas, Texas to deal with the problems that local people had. That's all they asked for. And instead of saying, let's work with you, they ignored over a year of trying to solve the problem. And the problem, while I am not a housing expert, should have put a person from the Secretary of HUD where they flew down to Dallas, Texas, and we're going to find this out next year when our young chairman will be in as the chairman. We're going to have the secretary come and tell us, what did they do? Did they fly down? Did they do calls? And then we're going to have the Dallas Housing Authority come and tell us about all their efforts to try and do something. So I find what is happening today very regrettable because Republicans did try and help. Eddie Bernice Johnson, senior member of this body, the Honorable Greg Meeks, a senior member of this committee, we went and personally met with them earlier in the year to try and say, please help us in Texas and in North Texas. Zero help from HUD. So I would have to beg the question, what good does it do to have someone that's job is bigger than they are in that position? And so I would like to let each of you know we do appreciate your feedback today. I don't agree that the blame game of Republicans or the prior administration holds any significance to where we are. President Biden accepted the ball where it lay, and that's what he'll be held accountable for. And each of you, I sympathize with you. I have a Down syndrome son. I am in the disability community. They are struggling mightily. People who cannot take care of themselves. This administration has turned their back on them. Thank you for the time, gentlemen.
You're so welcome, and let me remind you that we passed from this committee the Build Back Better bill, $150 billion. And so HUD and the president are doing and providing the leadership. Now, the gentleman from California, Mr. Sherman, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship and Capital Markets, is now recognized for 5 minutes.
Thank you. There's been a comment about inflation. I should point out that inflation is going to be worse or has been worse over the 2022-2023 period in most other developed countries as compared to the United States. So the real lesson is don't be a developed country on a planet with COVID and a European war. We've done our best to handle this situation. Every other country that's similarly situated has as well. We're told that maybe we shouldn't have a higher conforming loan limit in California than in other states. This is, I take this personally. If you've got a similar house in a similar neighborhood in one state and another state, the U.S. government should provide the same level of assistance rather than say it's okay to do it somewhere else, but not in California. I believe Mr. Holtz Eskin pointed out the inadequacy of supply, which I think is the problem. It is supply and demand. But keep in mind, we have more square footage of housing in our country than any other major country in the world. It's just we have giant homes for some people and others are living on the streets. We're urged to be patient. It's hard to be patient while you're living in your car. There are three problems. There's the homelessness problem where people can't even get an apartment. There are people who are in apartments, but the rent's too damn high. And there are people who can't afford or cannot comfortably afford to buy a home. We can build a few buildings with federal money. We as politicians can be there to cut the ribbon. But if you're trying to provide housing for nearly 340 million people in a capitalist society, you have to look at the homes that are going to be built and operated in the capitalist society. Otherwise, you're just cutting ribbons for a few hundred people. We can incentivize the building of homes, but it's nothing compared to what local governments do to prevent the building of workforce housing. If you require no more than 4 homes on an acre and a $100,000 fee to hook up to local services, you're not going to have housing that people can afford. We have the fiscalization of land use planning, where a city in my state loses money if they allow the construction of housing. And in many places, the way for the city, which makes the land use planning decisions, to make money is an auto dealership or luxury homes. Very low costs to the city, lots of revenue for the city. It is absolutely absurd that we provide cities with money based upon how rich their residents are. If every city in every state got the same amount of money per resident, we would have a fair provision of local services and the end of an incentive to keep out workforce housing. We see zoning decisions made to keep out poor people, sometimes to keep out people of color, sometimes to, quote, preserve the environment, which adds up to being often the same thing. If you can't build an apartment building anywhere in the city, you can't have workforce housing in that city. And when you look at the zoning and the fees, which this Congress has not prohibited, it's not surprising that we have more square footage than any other developed country and more per person, and we have more homeless than any other developed country. I've got to shift to another issue. I believe Ms. Bailey, should we be doing more to provide assistance for safe parking? Because a good chunk of the people, of the homeless people in my area, they have a car, they just don't have a place to live.
Sir, we should be doing more. I'm sorry, thank you so much for the question. And we should be doing more to make sure families can remain safely housed. The American Rescue Plan Act that this Congress passed included increased support to protect homeowners with the Emergency Rental Assistance Program. We have done a tremendous job of holding.
I'm going to try to squeeze in
together.
one more question. Mr. Mitchell, is there any way that we can create enough housing if we allow cities to charge $100,000, $150,000 per unit to the developer and to not allow more than 4 or 5 units of housing per acre?
I think it'll be critical for local governments to make sure that they are creating zoning laws that allow for the construction of the kinds of units that are necessary to house the number of people to meet demand. And currently we are not doing that. And as you mentioned, in most localities, it's not possible at this moment.
Thank you.
Thank you very much. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Chairwoman Waters, for holding this hearing and for holding the many hearings that you've held seeking solutions to the unaffordable housing crisis. Mr. Hull, in the Inflation Reduction Act and many of our housing proposals, we see proposals that attempt to solve inflation or high housing prices by simply giving more money to groups to pay higher prices. We also had proposals to give some people money to buy gasoline. Please comment on this approach to inflation and high prices.
This is subsidizing demand when the problem is demand is too high relative to supply. And so it just exacerbates the problem in the long run and undermines the intent of the program.
The Build Back Better Act is being noticed for this hearing. Can you please comment on the housing strategy in this proposal, including the heavy emphasis on the bill places on investment and refurbishing of public housing projects?
I have not stayed current with the provisions in Build Back Better since it did not become law, and I'd be happy to get back to you in writing.
Okay. Madam Chair, I yield back to balance my time.
The gentlewoman from New York, Mrs. Maloney, who's also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
So much, Madam Chairman, and I thank you for holding this hearing, and I thank you for focusing on the need for more housing. It is a persistent problem, the affordability of housing in my own district, and I would say in my city and my state, and clear across this country. And interest rates, I would say, have the raising of interest rates have worsened affordability for home buyers and homeowners, and I would say even renters. For example, between April of 2021 and April of this year, mortgage rates increased by nearly 2 basis points, and the median home price rose by over $50,000. And the monthly cost of home ownership, which includes a monthly payment on a 30-year mortgage, property taxes, property insurance, mortgage insurance, grew by at least $500 a month, but in some cases in metropolitan areas, it's grown by over $1,000 a month. So I would like to ask Dr. Zandi, an economist, whether raising these interest rates contributes to the increased cost of housing for homeowners, which is a goal of most families, and renters in this country.
Well, thank you, Congresswoman, for the question. Yes, clearly it does. I think your statistics, strike that point, quite clearly. I will point out, though, that to a significant degree, this is by design. So the Federal Reserve is working hard to slow the economy's growth, to quell the wage and price pressures. And the most rate-sensitive sectors of the economy are going to suffer the most as a result. Housing, single-family housing, is the most rate-sensitive sector of the economy. If you want to buy a home, most people have to get a mortgage, and thus the rate sensitivity. So this is, unfortunately, this is by design. But it does, bring up the broader point that housing affordability is going to be a long-term issue, even when we get to the other side of this, and get inflation back in and interest rates back down. And home ownership is going to be under significant pressure going forward. So it's about supply in the near term, but I do think longer run, we also have to think about ways to improve affordability for lower income disadvantaged groups, and demand side policies will become more important at that point in time. But in the here and now, the reduction in affordability is by design. The Fed is working to slow the economy's growth, and they're doing it by hitting the single-family housing market very hard.
But there would be other ways to address the inflation that's in our economy. I would venture to say housing has not caused the inflation in our country. It's more caused by the war in Ukraine, the war in Afghanistan, the disruption of our supply chain. And it seems, why don't we address those causes as opposed to attacking housing and the affordability of housing? I would like to ask, I'm concerned about the impact it's going to have on my constituents and other Americans to be able to afford a home with these interest rates going so high. We have a 30-year mortgage. My question is, could we change our policy to have a 50-year mortgage and possibly alleviate some of the pressures homeowners face in making their monthly payments? And I would add that this housing inflation affects renters too, because when the mortgage goes up, then the rent also goes up. So I would like your take on changing it from a 30-year, which is really the standard that we have in America, to a 50-year mortgage for 50 years, so that you could lower the rate and allow people who are confronting really constrictions in their income to afford home ownership.
It's an interesting idea. I would say the United States is very unusual compared to every other country, except with a few exceptions, to having the 30-year fixed rate loan. Most countries have much shorter mortgages. They adjust immediately with market interest rates, or 2-year or 3-year or 5-year. And that's because of Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac allow for the 30-year fixed rate mortgage to be the bread and butter mortgage in the United States. And right now that's insulating homeowners from this run up in interest rates. I don't know that a 50-year mortgage would advance the ball, Congresswoman, only because the typical American household lives in their house for no more than 10 years. So very, very few people would actually live in that house over that period of time. What I would, though, I'd throw out another idea, assumability of mortgages, right? So you get a mortgage at a low mortgage rate, and when you move, you can take that mortgage with you. FHA has some mortgages like that. That might be an idea that would be very helpful in helping insulate the housing market and homeowners and improving affordability in the longer run.
Thank you. My time has
The
expired.
gentle lady's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. Mr. Olsekin, the administration is considering under FHFA program to have rent control put in place. According to a survey of our nation's economists, more than 8 in 10 of them believe that rent control ordinances would harm both the quality and quantity of affordable housing in areas where it's implemented. American economist Walter Williams once said, short of aerial bombardment, the best way to destroy a city is through rent controls. Would you agree with that?
I would. There is a track record of failure of rent control provisions in states and localities across the United States. So it's not a theoretical issue. This is something that has not worked on the ground.
It's concerning. I think the discussion this morning is quite interesting from the standpoint that Mr. Sherman a minute ago was talking about trying to increase the supply. You've been talking about supply. Mr. Zandi's been talking about supply. And it seems as though the different communities try to constrict the supply through the amount of regulation they put out there. It's been a while, but I may be wrong on this figure, but it seems to me like I saw a figure, or heard a figure in this committee one time that said like 25% of the cost in some communities is rules and regulations compliance. I don't know if it's that great or not, but that's significant. And Mr. Sherman made the point a minute ago about how hundreds of thousands of dollars, and I've got a relative who lives in California, so I know it's extremely high in California to try and build a house or build any sort of commercial building just for the permits and all the other things you have to go through. These are costs that drive the cost of the construction up, which means it has to be recouped through the rents that are charged for the occupants of that building. There's got to be a way to control those and find a better way to do this. Do you not think so?
Everyone who studies this problem comes to the conclusion that an enormous amount of it stems from decisions made at the local level, whether they're land use zoning restrictions or construction codes, a variety of regulatory costs that raise the cost of housing. That has to be part of the solution. This committee, unfortunately, is not in every locality in the United States. And so it always comes up, what can the federal government do? And those tools are far more limited. And I think that's one of the reasons that historically the federal government has always turned to demand subsidies. It's not that hard to do that at the federal level. It's very hard to control these regulatory and land use decisions at the local level.
To take it to the extreme, I have one of my son-in-laws is in the construction business, and part of it is building he builds hotels, but he's in the business and understands building apartments and hotels and things like that. And he lives in Colorado, and he was telling me about Boulder, which you can't even build a new apartment building in Boulder. You can't build one. So how do you solve the housing process whenever you have a community board there, the city council, that would prohibit any new construction? They don't want people to come. This is crazy. And it's a college town with much, the demand is soaring. It makes no sense. So I think we've got to find a new way to address this from the standpoint of thinking differently about trying to address the problem instead of trying to constrict it and hope it goes away. It doesn't work. You know, part of the discussion this morning with regards to inflation, and you and I have had this discussion offline and in my small business committee a couple times, and I really appreciate your comments on it, but you know, it looks like inflation is fed by 4 different things: rules and regulations, energy, money supply, and then the supply chain employee problems that we've talked about. And you know, one of and much of this can be done with the administration, simply without congressional action. When you look at rules and regulations, I think your entity, your association, came up with a figure of $200 billion is what it cost last year for compliance, and it's over another $100 billion this year by this administration just on compliance for new rules and regulations. This is crazy. That has to all be implemented and charged through you know, rents and higher costs to the people who purchase products and services.
That's exactly right. We do keep track of the burden placed on the private sector of every new final regulation in the federal government, and the Biden administration finalized $200 billion of regulatory costs in its first year. That's the highest we've ever seen in our time doing this. It's well over 100 this year, and those are costs that will have to be passed on to consumers and show up as higher prices.
One more quick question, and it seems like we've got the Fed in contradiction to the administration from the standpoint the Fed's trying to constrict your ability, the demand, and on the other side, when you throw millions and trillions of dollars into the economy, you're trying to increase demand and supply. So I've never seen the Fed and the administration at odds like this. Would you like to quick comment on that?
There's nothing the administration's done that has helped the Fed. They could relieve some tariffs, and those are big costs, especially in the construction of homes. If we did a calculation, I'd be happy to get to you. They could do something with the regulatory costs. That they could not forgive the student loans, which is basically a $420 billion spending program. There's nothing about what the administration has done that is aiding and abetting the Fed's efforts to fight inflation.
Thank you very much, Madam Chair. My time is up.
Thank you very much. You know, you just hit upon an issue that I think we could work together on, and that is reducing the costs at the local levels for permitting, one-stop shops, and in the Build Back Better, we had appropriations in there for those who deal with the zoning problems in producing affordable housing.
There's a lot of common ground, Madam Chair.
I think we can work together on that. Thank you. The gentleman from Texas, Mr. Green, who is also the chair of the subcommittee on oversight and investigations, is now recognized for 5 minutes.
Thank you, Madam Chair. I thank the witnesses for appearing. Mr. Zandi, if we had not had a global pandemic shut down the world's economy, disrupted supply chains, if we hadn't had a war in Ukraine, would this be a different conversation that we are having today?
Oh, absolutely. Those two massive, unprecedented shocks to the supply side of the economy are the principal reasons for the very high inflation we're suffering through right now. And another person made the point earlier, one strong piece of evidence of that is this inflation that we're suffering through now is across the globe in all parts of the world. And it just drives home the point that these two supply shocks are difficult for any country to navigate through, and certainly we're struggling as a result of it. There's other reasons, but those are the two key reasons for this high inflation.
I raise these issues because I defend President Biden. I think President Biden has done a pretty good job under the circumstances that he's had to negotiate. And I think that for us to just allow it to be said simply that these are Biden problems, this is an extortion of the facts. It's not just an exaggeration. It's unbelievable that we would try to pin all of this on a president who has been able to manage our situation such that we're better off than most of the economies in the world. Is this a true statement, Mr. Zandi? Are we better off than most of the economies in the world?
Yeah, our economy is performing exceptionally well compared to the rest of the world. You can see that in the strong value of the US dollar against all currencies. It is very, very high by historical standards, and that's because the US economy is performing much, much better than other places in the world. So yeah, I think that is very, very much the case.
Let me add this as well. There's talk about not having hearings on inflation. Well, Democrats have acted. We've not just had hearings, we've acted on this inflation. We've reduced the cost of pharmaceuticals for seniors. Inflation is all about paying for things at a high price. We've brought those prices down. We've reduced the cost of health care for seniors. I happen to care about seniors. Some people seem to think that if you only help seniors, you're not helping the economy. Seniors are a large part of the economy, and they need help too. We've also engaged in the passage of legislation to boost the manufacturing of semiconductors. This is a real problem for us, having semiconductors made abroad, and we can bring down the cost of cars by dealing with the cost of semiconductors. So we've done our share, and it's time for my colleagues across the aisle to come up with the solutions and present them so that they too can have the opportunity to be perused closely and scrutinized even closer for what they're doing. Let's talk about people who live in the streets of life. It's my opinion that the greatness of a nation will not be measured by how we treat people who live in the suites of life, but rather how do we treat people who live in the streets of life, people who've had to sleep in their cars. Asking us to imagine what it's like to sleep in a car? I appreciate the question, but I think that it's more like water on a duck. It just rolls off. Never had to sleep in cars. We live in a different world. If people who sleep in cars were making these decisions, you'd get different results. We live in a different world. We don't have to worry about health care. We get sick, we just walk across over to the Capitol building. There's a doctor waiting on us right now. We live in a different world. We make hundreds of thousands a year. Our salaries are different. And I just resent and regret that you have to come begging and appealing to us, tears in your eyes, asking us to help. I stand with you, and I stand with poor people regardless of their hues. White people need help too. I stand with you, and I yield back the balance of my time.
Thank you very much, Mr. Green. The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Well, I do agree with my colleague, Mr. Green. We do live in a different world. But Ms. Eddy, I want to address you first before I get into some of the arguments you may have heard. Well, let's just call them robust discussions. That's a more polite way. We have common goals. We have different paths of getting there. But I want to say thank you for sharing your very personal story. I want you to know I hear you. I see you. I believe my colleagues see you and hear your story. And I recently had a chance to, in my hometown, visit with an organization called Jubilee Ministries that is working at trying to get at that workforce housing. And they have been running into, like all of us, my family's actually in construction, all of us have been running into, on the development side, the difficulty of maneuvering past local governmental regulations to allow for affordable housing to exist. It's density issues, it's various elements of sort of over-engineering in a way. In fact, the National Association of Home Builders says that their estimate is $98,000 per house is the average added cost because of that those local requirements. So how have we attempted to get at that? I know my colleague, Mr. Barr from Kentucky, who has been on this issue for a long time as well, has a bill, the Housing Plus Act. I've been involved in this issue for a long time as well. And we know that there have been burdens that have been put in place, and Mr. Holtz-Eakin has talked about this, and Zandy and others have as well. Mr. Mitchell talked about that. We have some agreement here that we have to get at this. What we don't necessarily have agreement on is sort of the sources of inflation and what are some of the causes of that. And I know, for example, in building houses, supply has gotten tighter and it's gotten more expensive. Labor has gotten tighter and is therefore more expensive. We know that 70% of a barrel of oil, for example, is used for energy, but the other 30% goes into things like shingles and siding and PVC pipes, all right? And when we are constraining that by choice here in the United States by this administration, we are then limiting the ability to have affordable materials there. By the way, I ran this little formula past Chairman Powell last time he was here, how to explain inflation. And I estimate in various studies that we've looked at, about 20% of the inflation that we're seeing today is due to supply chain. About 20% of that is due to labor. About 20% of that is due to the energy. Now, those last two are governmental policy driven. But 40% of that is monetary policy and spending. We have been flooding the zone, which has caused that pressure to go upwards in so many areas, whether it's in cars, as my colleague down from Texas will tell you, or whether it's housing, whether it's groceries, whatever it might be. So we know that record inflation continues to impact lives of hardworking Americans. I'm going to quickly move through. I know there's a number of well-intentioned things that the other side has done, but it does throw fuel on the fire. University of Michigan Consumer Sentiment Index estimated that the American sentiment over the past 6 months is comparable to late 2008 and 2009, when the great financial crisis plunged our country into economic crisis. The impact of the COVID pandemic spared no one. Michigan alone, some 32% of businesses reported government-mandated shutdowns in 2020, and job recovery has been slow. Reckless spending, including more government investments and overregulation, will continue the current trajectory. But today we're talking about housing, so let's do that quickly. Michigan rental rates have increased 10.5%, outpacing the national average. Grand Rapids metropolitan area, the yearly change for a one-bedroom apartment is up 5%, while a two-bedroom is up 17%. Home sales are down 17% statewide. Average monthly payment on a $350 home in Zeeland, Michigan, will cost approximately $500 more than it did last year because of those interest rates. Gas prices in my hometown of Holland continue to be well above national average. It's real money for people. It's real money. And I think we can, Mr. Holtz-Eakin, we can agree that both monetary and fiscal policy will be key to delivering the elusive soft landing. I'm just not sure it's possible. Do you believe that we can even achieve a soft landing?
I think it's possible, but the historical record is very poor on that front. We've never had a soft landing when inflation's been above 4% and unemployment below 5%. And that's where we find ourselves.
And Madam Chair, I appreciate the opportunity, and I blew up my staff's direction they wanted to go. But Mrs. Edie, I wanted you to know you're heard. We hear you, and we appreciate you.
Well, thank you very much. And I hear you, and I see you, and the proof of the pudding is in the eating. I'll be looking forward to working with you on housing and getting affordable housing. With that, the gentleman from Missouri, Mr. Cleaver, who is also the chair of the subcommittee on housing, community development, and insurance, is now recognized for 5 minutes.
Thank you, Madam Chair. Let me first of all express my appreciation for your emphasis on housing. I didn't grow up in a car. It was just a little bit better. We had 2 rooms, no heat. But I grew up in Texas, so it wasn't quite as bad as it would be here in D.C. I'm obsessed with housing. because I don't want a single kid to grow up like I did, not one. And we've got to keep working on it, and we got to, even if we have to debate, we've got to do that. You can never really defeat a person or a cause that will never give up, give out, or give in. And on this issue of housing, we need to face it, we need to fight it, and we need to finish it. Madam Chair, thank you. Let me ask Ms. Bailey and Dr. Zandy, there is in my congressional district in Kansas City, one of the nation's first housing co-ops. It's called Parade Park, which is now in distress. It is a massive 510-unit housing project. It's not public housing, it's a co-op. And this week, in fact, yesterday, Monday, HUD took management control of the property. And they're trying to preserve this affordable housing asset in this congressional district. Now, my greatest concern, it still is, if HUD had not taken it over, somebody would have eventually been condemned, foreclosed, demolished, and it's a huge tract of land. And my fear was that some corporate investor would come in, redevelop, raise the prices, and alter the community. So, Ms. Bailey, Dr. Zandy, what can we do, what can Congress do to prevent the mass transfer of affordable housing from community ownership to these large profit-seeking corporations? I guess that may be redundant, corporate, but what can we do?
Thank you for the question. We can do something different. We can make sure we put the resources in the hands of owner-occupants. We have to do something different. Supply-side strategies alone have not produced different outcomes. We need things like targeted first-generation down payment assistance, so first-time millennial homebuyers can get to the table fast enough to have their offers actually considered. 1 out of 7 homes in communities all over the country are being purchased by investors, pushing out millennial homebuyers of every hue. So we have to make sure those communities get the resources that they need so that they can actually be at the table. We know that student loan debt is one of the major barriers for these millennials. So passing the president's student loan debt, just allowing that to process forward, could really help lift their debt-to-income ratios to make those families ready to actually participate and be at the table in a competitive way against these investors.
Dr. Zandy?
Yeah, it's a very difficult problem. I mean, I mentioned 2 possible ways to address it. First is around the cost of financing. So in many cases, investors, particularly institutional investors in the housing space, have access to lots of capital, cheap capital, and they're able to use that to buy properties and win those properties when they're competing with other potential buyers. So a co-op, and I don't know the circumstances here, but kind of thinking about this more broadly, co-op, if they were able to get access to capital that more readily and more affordably, that might give them a better chance of holding on and winning out in that competition. The other thing I mentioned is, and we've got Fannie Mae, Freddie Mac, other the federal home loan banks. There's other government institutions that can be involved in this to help make that come to reality. Second, and this is not specifically to the co-op, but to single-family housing. One of the problems is when single-family housing goes into default and foreclosure, then large investors, again, because they have cheap capital, access to capital, can come in and buy those properties and take ownership. I think, and this is one of the proposals the Biden administration has recently made in its housing supply proposals, is to make sure that philanthropies like CDFI, CDEs, and others that are looking out for these communities have first opportunity at these foreclosed properties, these defaulted properties, before they actually go to institutional investors. So 2 different markets, but similar kind of problem. And I think we have some tools that we can use to help address this problem.
Thank you. Thank you very much. Thank you, Madam Chair.
Thank you. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Thank you, Madam Chairman, and let me join my colleagues in commending our witness, Ms. Edie, for your courage in coming before us and sharing your personal story. And it shows a lot of fortitude to come before Congress and testify and share your personal story. It shows a lot of guts. And what it says about you and your character is that we know you and your husband, you can make it. You can do it. And we appreciate your testimony, and we know that hope is available to you because of your strength that we see. My question to you is that in addition to housing assistance that you're asking for, would it be helpful to also have an advocate for you, someone that you can talk to in addition to housing and help you with job counseling, financial literacy programming for you and your family? Would it be helpful if you also had some additional services that could connect you with other services in addition to the housing assistance?
Thank you for your question, Mr. Barr. Anything that will be an asset for us to be able to come back into the community to make sure that we are, I'm sorry, I'm just losing my train of thought. Make sure that we can succeed in this. Of course, we want an advocate to be able to help us with our financials and job, descriptions or anything to do with that. Of course, we need advocates to speak up for us and teach us how to be literate with our finances and everything. Anything that will help us be an asset to the community.
And you are an asset to the community, and I can see that. And I'm not saying this applies to you, but others who have difficulty with homelessness or are living in their vehicles and not having a home, some of them have substance abuse challenges or mental illness issues. Not saying that applies to you, but do you think it would be helpful for them to, in addition to have housing, connect them with the mental health services or the substance abuse counseling? Would that be helpful to them?
Yes, it would be.
Great. Let me ask Mr. Holtz-Eakin a question about Chair Waters' Down Payment Towards Equity Act, which would spend $100 billion, essentially no strings attached checks of $25,000 that potential homebuyers could use towards a down payment on a home. Let's analyze the effects that this would have on a macro level. Would legislation like this contribute to home price inflation?
Yes.
Let's talk about it in combination with Fed policy right now, the tightening program that the Fed is engaged in. As the Fed is actively trying to tamp down soaring home prices by increasing interest rates to reduce demand, would legislation like the chair's work directly against the Fed's goal of reducing demand?
Yes, and most likely what would happen is the Fed would be more aggressive. Overall home purchases would be continue to decline because that's what the necessary objective for them. This might change the composition of who gets the house.
So demand-side subsidies would actually increase the likelihood that the Fed would have to be even more aggressive in raising interest rates and borrowing costs.
Yes, absolutely.
And would legislation like this result in a greater supply of housing or simply more demand for the same limited resource?
The latter. It's not a supply-targeted policy.
So while maybe not as flashy as handing out $25,000 taxpayer-funded checks so wealthy individuals could buy million-dollar homes, what are some of the serious proposals that Congress should be considering to actually increase our housing supply and address this affordability issue?
As I mentioned earlier, the tax incentives to increase construction, I think, make sense over the long term. You want to have a predictable, reliable environment that provides supply at a lower cost. So lightening the regulatory burdens at the local level, if you have a way to influence that, do it. There are tariff policies in place from the federal government that are raising the cost of construction and construction goods. That would be a sensible thing that could be reduced. And, The low-income housing tax credit's not perfect, but it's a thing.
Yeah, and to your point, and in my remaining time, I'll just point out a 2021 study by the National Association of Home Builders found that basic regulatory costs add $93,800 to the price of a new home. Do you support federal efforts to remove some of that regulatory burden to amplify the supply?
I think that's a sensible idea. I don't know how you can do it, and so I'd be happy to work with you on that.
Okay. My time has expired. I yield back.
Thank you. The gentleman from Connecticut, Mr. Himes, who is also the chair of the Subcommittee on National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Madam Chair, and a big thank you to our panel, especially Ms. Edie. I've been doing this a while, and I've seen witnesses who have lots of lawyers and days of preparation, and you've made a real impact in your story here. I chair the Committee on Economic Disparity and Fairness and Growth, and all over the country we found people like you who could live their dreams and contribute to the workforce if you just had that platform, which is not an automobile. Thank you. I really care about this issue because if we're going to address economic disparity, we're going to do a bunch of stuff, but housing may be first, second, or third in line. We're not spending nearly enough time this morning talking about what is the fundamental underlying issue, which is 3.8 is one estimate, million missing homes. Madam Chair, I want to place into the record some work that was done by our former colleague, Denny Heck. It's a report called Missing Millions of Homes, which talks about the supply.
Without
imbalance.
objection, such is the order.
And so I want to devote my time to, we've said we should look at it, we should focus on it, stuff. What can we actually do? Now, by way of preface here, we're talking about the Federal Reserve. Federal Reserve's damned if they do, damned if they don't, as long as there's not 4 million units that we need out there. The work we did on my Committee on Economic Disparity showed two things. One, lots of interference with supply associated with local zoning regulations and all sorts of other issues. And also a severe lack of supply in the workforce. Apparently, the construction workforce used to average 36 years of age in 1985. Today, it's 42. So you have an aging workforce. So my question, I'm going to start with Mr. Mitchell, but Mr. Mitchell, I'm going to ask you to be real brief because I want to hear from our other witnesses. What specifically can the Congress of the United States do to address the supply? And let me say, too, LIHTC, I get it. I worked with LIHTC. There's actually bipartisan support for increasing LIHTC. 2 million units, that's good stuff. But apart from tax subsidies, what else can the Congress do to rapidly allow for the construction of some 4 million units in this country?
Absolutely, Congressman. I think one of the most important things that Congress can do is to continue to make large public investments. I think things that have been targeted in the Build Back Better, specifically billions of dollars for the Housing Trust Fund, resources to renovate stock that's already available and make sure that it is quality and affordable would go a long way.
Any programs there that you see as particularly effective?
I would lift up, I think, really making sure that the National Housing Trust Fund would be really critical.
Thank you. Appreciate that. Let me go to Dr. Zandi on the supply question.
Yeah, I think what would really be critical is providing financing for manufactured housing. If you really want to get a lot of units out there fast, make it easier for people to get loans for purchasing a manufactured home. Right now, they're chattel loans, and that's a fragmented market, very costly, very difficult. This is something that Fannie Mae and Freddie Mac could be very helpful in developing a more cost-efficient, homogeneous market for those loans. And if you could do that, then you take the manufactured housing market, which today produces 100,000 units a year, to something that's meaningfully higher than that, very affordable, and can be in any community across the country. So if I was looking for something that wasn't tax-related, I'd be focused on that like a laser beam.
Thank you. I appreciate the specificity. Let me open it up a little unfairly to Ms. Bailey and Mr. Holtz-Eakin. Local zoning. I got lots of small towns that are uninterested in being told by the federal government that they've got to lighten up their zoning. So we've got a real problem without much of a lever. So let me start with Mr. Holtz-Eakin, if you would leave a little bit of time for Ms. Bailey. But what levers, if any, do we have I don't want to use the word coerce, but to encourage a rethink of zoning and regulation.
I think you framed it exactly right. Those regulations and zoning rules exist because they want them. And so you're going to have to somehow have a lever that causes them to change their mind. Usually that's financial, and making federal aid contingent upon the behavior at the local level. That's probably the lever that would be the one you'd want to try. And I'm happy to yield the rest of the time. That's a hard question.
It's a tough question, Ms. Bailey, but I'd love to get your perspective.
Fully enforce our nation's robust fair lending laws and fair housing infrastructure. We actually have this unfounded association between race and risk that's really the root of a lot of those zoning ordinances, and we are causing the economy to underperform. So if we fully enforce our nation's fair housing and lending laws, we'd actually create equitable opportunities that could help us actually create jobs. Fair housing actually creates jobs.
Thank you. That was perfection. My time just ran out. Thank you very much, Madam Chair.
Thank you very much. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair, and I thank everybody for being here today. And Miss Eddy, I want to join in on thanking you for your testimony. It reminds me of a Bible passage. Luke 6:38 says, "A good measure will be given to you, pressed down, shaken together, put into your lap. For the measure you give will be the measure you get back." And you're giving a lot today, and we appreciate it very much. I also want to just touch on what we've talked about. It's been a great hearing. I think we have a lot of common ground here. It's good to see. But I own some apartments, and I'll tell you, and we've touched on it, everybody's touched on it, the biggest problem is not the rates, but the rates are based on interest, they're based on local jurisdiction, and they're based on inflation. You know, we'd love to charge less, so that's something we get to work on. It looks like we all agree to that. So let me just start saying, and also you said you lost your trend of thought. You can be a congressman. No problem. That happens all the time. So American families and businesses have been feeling the impacts of runaway inflation for far too long. We've heard it today. Research from the Federal Reserve Bank of San Francisco confirmed what Republicans have been warning about for the past 2 years. Reckless government spending contributed to the price increases that we are all experiencing as a real problem. I'm in the car business, so I can tell you all about that. It was irresponsible to think we could spend trillions of dollars and expect there to be no negative consequences. So rather than recognizing the ramifications of their policy decisions, my Democratic colleagues seem to have doubled down their belief that inflation can be tamed with even more government spending. Simply look at the bills attached to this hearing. There are billions of dollars in new federal programs that will make prices even worse off and higher. So let's be very clear. You can't spend your way out of this inflationary cycle. So, Mr. Holtz-Eakin, can you discuss how the policies attached to this hearing, including the entirety of the $3 trillion Build Back Better, which everybody's talked about, will further contribute to the inflation all Americans are currently facing?
By and large, they continue the tradition of demand subsidies, especially in housing. There's a long tradition of that in the federal budget, and yet we are here with an enormous affordable housing crisis and large inflation. Seems to me we should learn the lesson and try something else.
Right. Now, the mismatch between housing supply and demand has been continuing worse each year. And this is a total problem with everything. There's more demand than we have. I'm in the car business. We don't have any vehicles to sell, but there's a lot of demand, and that's ramping up inflation. So this has driven home prices up to their recent highs and made home ownership unrealistic for many Americans. And when you hear people talk about a 50-year mortgage, that's pretty scary. And as we look for solutions to this problem, we must focus on the supply side of this equation instead of programs that will create more demand for housing and continue the inflationary cycle. So if we incentivize the private sector, which is always good, to build new housing units, it will begin to alleviate the upward price pressure. So unfortunately, supply chain issues and labor shortages are making the numbers more challenging for the private sector to make these types of large investments. I believe the tax code can be used to help make the economics of these deals work. So, Mr. Zandi, you discussed some tax credits in your testimony that could help solve some of the problems. Could you elaborate on these suggestions and how they would allow the private sector, someone like me and others, to invest in new housing units?
Yeah, I mean, at the end of the day, you want to incent builders to go out and build more homes as fast as possible, and we want them to build mostly affordable rental. We need housing across the housing stock, but the most acute problem is for affordable rental property. And I mentioned 3 different tax credits in my written testimony. We talked about LIHTC. That's tried and true, and I think very effective. Another tax credit I think that I think we should do is around the Neighborhood Home Investment Act, which helps with rehabilitation. As you know, in many communities, both urban, rural, you can renovate and buy land, renovate, buy old property, renovate, buy old buildings, renovate, and the market value is too low to cover the cost of that renovation. So this tax credit would help builders and others defray that cost, and so we get more renovation of this old housing stock that we have in different parts of the country. And then the third is the new market tax credit. Again, tried and true, and there's a lot of bipartisan support for it. And that really is incredibly effective at building out underserved communities. It helps not only with affordable housing, but it helps with healthcare centers and community centers and healthy food, all the things that are critical to making housing work for a community. So I think I focus on those 3 things. And again, those programs are in place. They're very well understood by everyone who's participating in them. And I think we can just juice them up a little bit. And I think we can get a lot more housing supply here in the not too distant future.
Okay, thank you very much. I yield my time back.
The gentleman from Illinois, Mr. Foster, who is also the chair of the Task Force on Artificial Intelligence, is now recognized for 5 minutes.
Yeah, I guess this question is for Mr. Holtziken or Mr. Zandi. If you look at all of the different incentives that we try to apply to get people in housing, both on the supply side and the demand side, has anyone systematically looked at what gets the most people into a house per unit of federal expenditure?
I don't know the answer to that. If someone does, it's Mark Zandi, so should let him go.
Okay, Mark, you're up.
Doug's my buddy. It depends on circumstance, Congressman, right? I mean, if you're saying on average through the business cycle on trend, and you're talking about home ownership, getting people, lower income people into home ownership, those demand side measures are critical. I mean, the down payment is the single biggest barrier to home ownership. Now, I'm not advocating that that's the appropriate policy for this point in time, but there will come a time in the not too distant future when we should be focused on that, because home ownership hasn't gone anywhere in 40 years. It's gone up, it's gone down, it's gone all around, but it's back to where it was 40 years ago. And if you kind of do the arithmetic here, it's headed south, not north, if we don't do something about it. And I do think down payment assistance could be well targeted and paid for. It needs to be paid for. Would be very helpful here, and that is very, very effective. Not now, but you look out 2, 3, 4 years from now, I think that will be a big bang for the buck, as they say, for that kind of policy.
Yeah. Well, I guess my question is there something, if it hasn't been done, that Congress can commission, that let's have someone look systematically at all the different things we try and try to figure out what is the most effective use. Ms. Bailey, do you have a?
Thank you so much. Chairwoman Waters' Down Payment Toward Equity Act would invest over $100 billion in first-generation down payment assistance. It would create 5 million net new home buyers. 1.7 million of them would be Black, 1.32 million would be Latino, and 1.4 million would be white, because white people in rural communities are locked out by these same policies. We need creative, innovative, targeted solutions like that to bring in the very borrowers that the future system depends. We won't have a housing system if we don't put equity at the center. The market's future buyers, 7 out of 10 of them will be people of color. If people of color are not able to overcome the barrier of down payments and get access to home ownership, our housing system tanks, which means the gross domestic product, the housing nearly accounts for 20%, drags down the whole economy. Inclusive solutions are about bringing everyone along. We commend the chairwoman for her brilliant leadership, and it is not lost on any of us that one day her picture will hang on these walls, and families like Mrs. Edie's and her wonderful husband will not be in a position to have to do it on their own, because the American way has been that we've never required families to do it on their own. Our public policies created opportunity for people. We've not done it in an equitable way. Now, COVID requires equity.
And, you know, the thing I'm struggling with is, okay, we can also help her with housing vouchers, you know, just a big expansion of the housing. And so how do we look at that? You know, with housing vouchers, that will cause over time more people to build more units if we really expanded the housing voucher thing. And it's one of the ways to get at the mismatch between the number of units available and the number that are needed. And I'm just trying to understand how we most effectively use the subsidies that we will have available.
We can enforce our laws. Source of income discrimination is one of the primary barriers for why women with families cannot get access to those housing vouchers, because landlords are denying them those units. So we have the tools, we have to have the courage.
And just following up on Representative Himes' questions about the carrots and sticks that the federal government may have available to get rid of some of the local barriers. Is there any, that may be the most cost-effective way in terms of changing the number of units available per expenditure of federal dollars. And is there any, even a rough way to calculate how effective those might be? Mr. Holtz-Eakin, you want to have a swing at that, or how we would even go about trying to understand whether that might be the most effective way to spend our money here?
So this sounds like the kind of thing that the Congressional Budget Office could be useful in helping you with. They have a long history of looking at both federal mandates on state and local governments, but also the response of states and localities to federal spending programs. And I think that's the place where you want to look at the track record and see what worked.
Okay, and we'll be following up for the record with you and Mr. Zandy on that. Thank you. I'll yield back.
Gentleman's time has expired. The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Thank you, Madam Chair, and let me too start out with thanking all of you for your work for the committee today and expressing your views on this important topic, and thank our chairwoman for her compassion and commitment to housing as a public policy topic. I want to follow up too on Mr. Himes' comments, my good friend from Connecticut, talking about this gap, the supply side gap. I think that's important. He raises some really good issues. First, I've offered amendments consistently on the House floor for 8 years that non-union construction trades be approved DOL apprenticeships. And every year that bill is voted down by the majority. But the DOL union-based apprenticeship program only produces about 88,000 construction trades when we have a market demand of over 600,000 a year. So I think opening up and qualifying more people to fill that gap is an important labor component in the supply side on construction. Local zoning is an important issue, and I was real pleased to see Ed Pinto's work at the American Enterprise Institution on walkable communities and how cities could develop best practices for increasing density, changing a lot of the rules and making it cheaper and more affordable to come and do infill housing, which also brings with it quality grocery stores and things of that nature. We're doing that in Little Rock, and I've been impressed with some of the performance there. I agree with Mr. Zandy on new markets tax credits. I've been on the CDFI advisory board when President Bush was in office, and it's something that Congress has generally supported. But the numbers are so high, it's almost impractical in multifamily, and certainly impractical in low income or low moderate income affordable housing, I think, because the program really, if you can't spend $10 million in one location, it's not, ends up not being competitive. So perhaps Congress can look at that. And then I support extending the Tax Cuts and Jobs Act opportunity zones and making a much more aggressive approach there on how we can have better opportunity zones that benefit low, moderate income housing opportunities. So those are some issues on the supply side, I think, that are very, very important. Chair Powell gave a speech at Brookings yesterday where he broke down core inflation into 3 components: goods, housing, and services other than housing. And the chairman acknowledged that housing services inflation which measures the rise of all rents and rental equivalent cost of an owner-occupied housing. And in my view, over the last, particularly 2 years of this intense 40-year inflation, it's way understated the consumer price index. As many of you know, 30% of the CPI and 40% of the CPI are based on both rental and housing. And Madam Chair, I'd like to, or Mr. Chair, I'd like to put in the record the core PCI inflation index.
Without objection.
Thank you, my friend. Mr. Holtz-Eakin, would you agree that the method of calculating owner-occupied housing lags the market and understates the full picture of just how much housing prices and rents have gone up? We heard one of our witnesses talk about 22% rent increases. Is it understated, Doug?
Yes. Yeah, the imputed piece is understated. It lags the market.
So it's really worse. What we're facing in rental increases and home price increases are worse than they have appeared in the trailing statistics.
Yes.
Yeah. And I think that's something that's, again, frustrating that housing's taken such a big hit. But let me say that when we spend money in this Congress like drunken sailors and keep accommodative monetary policy far too long at zero, we all pay the price. All of our families pay the price with these higher mortgage rates. I was looking at H.R. 4495, the Down Payment Towards Equity Act, and it as I noted in my opening comments, they don't really address supply. It is a more demand-driven issue. And I'll just give you some feedback that in Arkansas, we're one of, I think, about 20 states that uses the bond program and recycles that down payment assistance money on top of HUD's home program and CDBG. We really have worked hard, including with the CARES Act money, to provide down payment assistance to people that are qualified, and we have a surplus every year, meaning we really have, I think, a good housing market in Arkansas. But I think I'd like to see CBO or GAO tell us where the weaknesses are in down payment assistance, because in my home state of Arkansas, I think we've got really sufficient and helpful to everyone in that emerging equity. But I'd love to hear more from you, Ms. Bailey, if you could submit to the record some comments on where you think it's adequate and where it's the most weak. That would help us. Thank you. I yield back.
The gentleman's time has expired. The chair recognizes the gentleman from California, Mr. Vargas, for 5 minutes.
Thank you very much, Mr. Chair. First of all, I want to thank Chairwoman Waters. I agree with Ms. Bailey that she has been a champion for housing, and I think that she's been the lion of Los Angeles trying to get more affordable housing, and I appreciate her very much. Mr. Chair, I also appreciate you. You quoted the Bible, and I'm sure you knew what you were doing, but you modernized it and called it the people in the street of life. But you were really quoting Matthew 25, which is the last judgment. And I want to read a little bit, because since I'm Catholic, I don't memorize, although I do memorize this passage. I have to read it. But it says this: "For I was hungry, and you gave me food. I was thirsty, and you gave me drink. I was a stranger, and you welcomed me. Naked, and you clothed me. I was ill, and you comforted me. In prison, and you came to visit me." And of course, they asked him, well, when did we do that? When you did it for the least of my brothers. Now, I have to say, I think that both sides share that. I have many friends on the Republican side, and great respect for the gentleman that was sitting next to you. I think he's still there. I can't see him on the film, but Mr. French Hill, good friend of mine, I know he wants to do that. And trying to get there, I think, is a hard part, and because we disagree on strategy. But hopefully, we can come together a little bit more to get things done. I do want to ask about inflation, because this has been brought up a number of times. And so, Mr. Holtz-Eakin, you addressed inflation. What is the inflation rate in the EU?
I don't know the exact rate right now, but they have very high inflation, especially since the onset of the...
Is it higher than ours? Is it higher than ours? Is it higher than the United States?
In some places, yes.
Okay. How about in the UK?
Yes.
Have they implemented President Biden's policies?
No, but I think if you look at the period when the policies I mentioned were most important, it's 2021, when We saw inflation get to nearly 7% on the consumer price index year over year. European inflation was nothing like that. All of that preceded the invasion of Ukraine by Russia. So the period where the policy impacts, the excessive monetary stimulus, the excessive fiscal stimulus was 2021.
But you
That
don't
produced,
think, so you,
that's,
so you don't think this is related to the pandemic then?
I think that European inflation went up about a percentage point a quarter in 2021, went from 0 to 4%. That was by their standards very high inflation, and that's a good metric of the impact of the pandemic on global supply chains. We were nearly double that. That was the additional monetary and fiscal stimulus that the U.S. undertook.
Yeah, but the interesting thing is this: they didn't implement our policies. They're higher than us. It's 11.5% inflation rate in the EU. The UK is 11%. They're much higher than we are. So this whole thing was used politically, and interestingly, it didn't actually work. Americans are much smarter than I think some of my colleagues on the other side think, and they knew that it was political and it wasn't reality. But anyway, let's move on, because I do agree with a lot of what they've said today about regulations at the local level. I do believe that. However, I also think, and because no one wants poor people, that's the problem. Everyone wants density somewhere else, not in their own community. It's a real problem. But Mr. Mitchell, I wanted to ask you this. In the Build Back Better, Madam Chair and the rest of us were pushing, and especially she was, for $150 billion. What would that have done for affordable housing in the United States?
Thank you, Congressman. So I think there are two kind of horizons that we need to be thinking about the policies here. In the immediate future right now, given the rapid rise in rental prices, being able to make sure that renters in this moment have the supports that they need to be able to afford rent, or other folks being able to find housing, there are significant investments in Build Back Better that would have allowed for that to happen. At the same time, there is also resources available to make sure that we have the housing supply in the long term that is either being upkept or renovated or putting more housing supply online. So there are resources in Build Back Better to accomplish both of those goals.
And I agree with my colleagues again on the other side of the aisle. It's big time supply issue. We have to build more, and we have to figure out how to do that, and hopefully together. I've got 10 seconds left, so again, I want to thank everyone, all the witnesses here, and I yield back. Thank you.
The gentleman's time has expired. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Mr. Chair. So thank you for this hearing. I think it's important we talk about these issues. My question is directed at Mr. Doug Holtz-Eakin. Earlier this year, the government-sponsored enterprises, GSEs, announced their plans for equitable housing finance at the direction of the Federal Housing Finance Agency. The plans call for lower down payments requirements and reduced mortgage insurance costs for prospective minority homeowners, among many other things. Many other changes disregarding considerations of risk and ability to pay. And increasing home ownership by encouraging riskier mortgages is exactly what led to the 2008 financial collapse, which actually disproportionately hurt the minority homeowners it was intending to help. Yet it seems we've learned nothing. Moreover, FHFA Director Sandra Thompson has refused to finalize a proposed rule that would have subjected these concerning changes to review and public comment. This administration, frankly, has a habit of circumventing traditional rulemaking process, from the Consumer Financial Protection Bureau, CFPB, making substantial changes to its examination manual, to the Department of Veteran Affairs issuing an interim final rule allowing for taxpayer-funded abortions in violation of federal law. So, Mr. Holtz-Eakin, can you explain the dangers of the GSE's equitable housing finance plans and why changes of this significance should be subject to public scrutiny?
Well, I mentioned the rule that you brought up in my written testimony. It is important if the GSEs are going to roll out new products that they be subject to review, and I think it'd be good to finalize that rule. Historically, this is the kind of slippery slope that got the GSEs into trouble and ultimately put them into conservatorship and put the taxpayers at such risk. These are highly risky loans. That they are riskier than they than they otherwise would be because they couldn't get the conventional treatment. So they need special treatment to get them a loan. And, they're more likely to, as a result, have financial problems down the line and for the taxpayer to be on the hook for the cost. And tragically, we have in fact seen the disproportionate impact on minority communities that these efforts had. I mean, I was in the Bush administration early 2000s when there was an enormous push for minority home ownership, and with the benefit of hindsight, all we did was wipe out the net worth of millions of families, and that was not a wise thing to do. And so I'm concerned about this initiative, not because it is in and of itself so large, but it's indicative of the kinds of things that might be pursued going forward.
Well, thank you. And again, I really worry this will harm the minority homeowners that it's intended to help. And again, my friends on the other side of the aisle, I know are trying to help. I'm trying to help. We all have good intentions, but it's not the intentions, it's the policies and the effects that we need to look at. And you don't want to do something as well intended as it might be that has the opposite effect, which is what seems to happen with a lot of these policies. What we should do is encourage, savings and living within your means, both as a country, United States of America, and as individuals and families. We already know how reckless spending policies were a leading cause of this inflation crisis we're in now. And I can tell you, as a Cuban American myself, I believe that increasing minority home ownership is a worthwhile goal. My mother fled communist Cuba, where the government offers no freedoms and dictates every aspect of people's lives. The United States, a free market economy, welcomed her with open arms, as they do other immigrants. The solution to America's housing affordability challenges is to reduce government spending and regulation in the housing market. We should instead advance free market policies that increase opportunities for all Americans, regardless of race, ethnicity, or religion. So thank you, Mr. Chairman, and I yield back the balance of my time.
The gentleman yields back. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and special thanks to Chairwoman Waters and Ranking Member McHenry for having this hearing today. And before I get started on my question, I would just like to say I really appreciate Ms. Edie's testimony in this committee, which exacerbate the problem that we really have in America, and what we, if I had a magic wand, I would wave it and see if we could solve some of the problems. So I hope that all of us can come together, Democrats and Republicans, to do something to solve this housing issue. I once was homeless. We lost everything in a fire and had to move from time to time. And I know how difficult it is in raising a family. And I really applaud my father today. I don't know how we got out over the years, but we made it every time some relatives would put us out. And so I know what that's like, and I know that we are fortunate today to have the opportunity that we did have. But to Ms. Bailey, my home state of Florida has the largest homeless population in the United States. And we know homelessness has an adverse impact on people of color and lower income communities. In your testimony, you discussed how the COVID-19 pandemic exacerbated the housing discrimination and the wealth gap. What are some considerations Congress should keep in mind to ensure that there is an equitable solution to address these issues?
Thank you so much for the question. As the descendant of formerly enslaved Africans, I have to say our nation's mortgage market was built on the bodies of enslaved Africans. The fact that we are here today talking about the housing system means we're talking about our ancestors. So let me start there. We have to make sure we have equitable policies because for the entirety of our nation's history, our housing policies, federal, state, local, have been implemented in a way that cements and perpetuates residential segregation. There is an unfounded association between race and risk because of enslavement in these United States. It's not that we don't want Black people, Latina people, Asian American and Pacific Islander people, and Native communities for whom the land was forcefully dispossessed to have opportunity. We don't want the people, and we have to talk about that in our communities, our zoning ordinances. We're saying we don't want integration, when in fact today in America, we actually are seeing integrated communities. We've actually seen the Black homeownership rate go up, the Latina homeownership rate go up, and the Asian American homeownership rate go up because of inclusive policies. This committee's work in the American Rescue Plan Act to preserve homeownership with the Homeowner Assistance Fund and the Emergency Rental Assistance meant that we kept families housed during the time of a great COVID pandemic that disproportionately impacted the very same people that the Great Recession decimated. You want to talk about responsibility and personal opportunity? Let's talk about it. The Homestead Act created 20% of the wealth that white Americans and his families still today who got that benefit can point to. People of color were intentionally locked out of opportunity. We know inclusive policies work. Why in the world would we want to go back?
Thank you. Real quick, Dr. Zandi, you mentioned during Congressman Williams' testimony, I think that one way to help the housing market is to increase the rental assistance program other than affordable housing. Can you comment on that, please?
Yeah, clearly, many households are unable to afford the current high rent, and so we are seeing obviously higher homelessness and very fragile housing tenure. So I think it is, particularly in this point in time when rents are so high and unlikely to come down in a meaningful way anytime soon until we can get more supply into the market. It is important to provide assistance for rent. So rental assistance is I think at this point particularly important for people who are really under a lot of stress.
Okay, thank you. With that, Mr. Chairman, I yield back.
The gentleman yields. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Chairman. Thank you to our witnesses. I appreciate you being here, and I appreciate the committee's emphasis on affordable housing. You know, frankly, compared to Washington, D.C. or California or New York or someplace like that, pretty much everything in Ohio is affordable. But for people that live there, your income's based on Ohio, not in D.C. So, you know, we all have our different challenges around the country, and we have a lot of federal policies. So, Mr. Holtz-Egan, I kind of want to explore some of the conversation that you've had about, you know, the Federal Reserve has engaged in, you know, activities that have distorted the market. First and foremost, in 2020, they did provide essential stability in March and April when, you know, our markets were in free fall. You know, we can only have a functioning market if there's eventually a buy side. There was no buy side. So they intervened, they created some stability, they did some heroic stuff. Then almost right after that, they started doing truly market distorting stuff. One of the worst things related to this hearing, they were buying for months and months and months, $40 billion worth of mortgage-backed securities and holding rates really low. So that created an asset bubble, you know, potentially. And, you know, you've emphasized that they need to cool off demand. So, you know, people are going to need to live somewhere. So when you talk about demand, is it somehow people stop demanding a house? How does that play out for the average family in Western Ohio when you've got the Federal Reserve setting a price, now rates start going up? When you say cooling demand, how does that play out?
Call Sarah Mitchell.
So sorry, I got distracted. First of all, I think it's a very good point that the Fed did a tremendous job in 2020 of stepping in and providing enormous amounts of liquidity and having financial markets stabilize fast. We don't think of 2020 as a year of a banking crisis or financial crisis. We had the pandemic and lots of problems.
Hello, Sarah. How you doing?
Mr. Larson, could you please mute your mic?
Okay, I'm doing pretty good. It's in committee meeting, but hey, that's part of
Someone please mute his mic for him.
What's
going on? I apologize.
So
thank you.
So they did a great job, but as part of that, they made a decision to buy the $30 billion a month of MBS, which was a clear subsidy to the mortgage market without great discussion. And now that they're taking it back in an even greater amount, it's having an enormous impact on housing markets. So their very blunt tools, raise rates across the economy, every class of credit, every maturity, and pulling back on this liquidity are having a disproportionate impact on housing at a time when people need housing. And so that's to me says, number one, the Fed doesn't have fine tools that can target different sectors. It doesn't. And number two, don't get yourself in a position where you have to fight inflation like this. Once you do, you have nothing but bad choices. You need to slow down the labor market. That means fewer jobs. You need to slow down retail sales, fewer sales. None of that's good news. And that's the position we now find ourselves in.
Yeah, so people sometimes say, don't fight the Fed, right? The Fed is moving things one way or the other. When you think about households, they have to find a place to live. Rates are going up, so fundamentally that means what? They're not going to buy. That means somehow rents aren't going to go up. I mean, the people that own the property, they're going to have rents move where rates move, right, or where inflation moves. I guess, can you highlight the dangers of kind of this overzealous activity that the Federal Reserve has gotten themselves in? Because it really does limit their options without affecting the average American, doesn't it?
So I think the activities that are attributed to the earlier policy errors. There's no question they were excessively loose, and now they're trying to take it back as fast as possible. It's having, as I said, a really bad impact on the housing market, much stronger than, for example, the labor market, which continues to produce 100,000 jobs a month. It'll show up in building, and so home builders are clearly looking at a poor outlook. As a result, we'll have fewer single-family homes, and the rental market will become much more heavily contested, and rents are going to go up, and I think that's where the rubber hits the road. And it's going to be a tough housing market for the foreseeable future.
Right. So I just think there's a lot of consequences for the Fed's actions, and they can't take it back. They might feel bad. They don't really express it very well if they do, but there are big consequences for this. And I think the last thing I'd say, the reaction to say, well, let's subsidize all of it. Well, what does that do? It increases government spending, and it pushes the Fed to print more money, which drives more inflation, which is how we have the problem we have today. So we should be careful about our own policy tools here in Congress. My time's expired, and I yield back.
Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley, who is also the vice chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Mr. Chair, and I thank our chairwoman for holding this critical hearing and consistently highlighting the urgent need in our country for fair and affordable housing. In my district, the Massachusetts 7th, housing is devastatingly in short supply. My constituents, particularly those who are Black, brown, and low income, are being priced out of their homes due to skyrocketing rent. And I want to highlight today just how urgent the need is for investments and policy solutions that meet the moment to address this housing crisis, especially for renters in districts like my own. Across Massachusetts, a quarter of all residents spend half their income or more on housing. Boston is now the second most expensive city in the country to rent in, where the median rent for a one-bedroom apartment is just over $3,000. This is a crisis, and we must act swiftly. Housing is at the intersection of everything. We will never actualize economic justice, close the racial wealth gap, improve public health outcomes, recognizing that housing is a critical determinant of health, or meet our climate goals without addressing this housing crisis, this affordable housing crisis. So Congress must act simultaneously by investing in affordable housing supply as a long-term solution, while also enacting policies in the immediate to reduce costs in the here and now. Mr. Mitchell, experts agree that the limited supply of affordable housing is the root cause of housing inflation. Can you explain why we must address it?
Absolutely, Congresswoman. I mean, to your point, exactly what you said. Many folks in the housing advocacy space say the rent eats first. And what this means is housing as the single largest budget item for households and for low-income families accounting for almost half of their budgets, it means that they have that much harder of a time when rents increase of making ends meet and become that much closer to eviction and homelessness. And this is especially true for Black and brown renters. For roughly 1 in 5 Black renters last month reported that their household was behind on rent payments. So it's absolutely imperative that we address the housing affordability crisis.
Thank you. I certainly agree. And this committee, under Democratic leadership, has long supported bold investments in our housing supply. But even so, working families across our nation are struggling right now, and they cannot afford to wait years for housing supply to be built. There's 7 days in a week, and not one of them is called someday. We've got to act now. We need to pair these longer-term investments with short-term solutions that alleviate the financial pain that families are facing today. In past moments of crisis, when prices previously spiraled out of control, our country enacted price controls in housing to maintain stability. Mr. Mitchell, how would rent stabilization be effective in ensuring folks are housed in the short term and helping working families across the country, also while avoiding homelessness?
Given the immediate needs of renters and the outsized power of landlords to significantly raise rents in this moment, rent stabilization policies offer a near-term pathway of providing relief to renters and addressing the fundamental power imbalance that we're seeing right now. And we should note that rent control policies have evolved tremendously over time. Most modern rent stabilization efforts, they target specific property types within a city or a locality, and they allow for more controlled rent increases, and that mitigates a lot of the negative concerns that people often associate with rent control policies. And the research here is very clear. Rent control policies, they reduce rents for the tenants that they're targeted at, they increase residential stability, they protect tenants from eviction, and more recent research suggests that these modest rent stabilization policies, they also do not deter new construction. So in some ways you can see that pairing these rent stabilization policies then with the investments in putting new supply online can work well and work hand in hand together.
Thank you, Mr. Mitchell. I certainly agree. And housing is a human right. We have to be responsive to the pain that families are currently experiencing with a two-pronged solution that pairs longer-term investments in housing supply with immediate policy change that ensures access to affordable housing. Everyone deserves more than shelter. They deserve to have a home. Thank you, and I yield.
Gentlelady yields back. The gentleman from North Carolina, Mr. Budd, is now recognized for 5 minutes.
Thank you, Chair. I just want to begin with a couple of facts, a bit of a review. So in 2021, we saw the average home price rise almost 20%, which was the largest increase in the 34-year history of the Case-Shiller Index, which tracks average home prices. Now, when you couple that with historically high inflation, you can see that we've really got a recipe for economic pain. The average rate for a 30-year fixed mortgage has doubled over the last year alone. It was about the 3% range in March to now over 7% in October. So let's break that down. If we take the average home buyer looking for a basic FHFA-backed loan for a median-priced $430,000 home, then you factor in national averages for property tax, home insurance, and a 20% down payment at a 7% interest rate, that home buyer's average monthly payment is going to be about $2,900. Now compare that to a year ago when the rates were closer to 3%. That's about an $850 increase every single month. Now, I don't think that working families have an extra $10,000 laying around. So instead of addressing the root causes of high inflation, things like reckless runaway spending, as we've seen the Democrats focus on the same old failed progressive policies. According to the National Association of Home Builders, 25% of all costs associated with a single-family home and developments are directly attributed to regulations. That's a 25% tax that gets passed on to these home buyers. So tell me, how is more spending and more regulation going to fix that problem? It's not. I think we'd be a lot better off to find a better solution to address domestic supply chain issues, ease regulations, especially on the local level, not here in Washington, D.C. We need to encourage them in reducing regulations here in Washington as well, but especially on the local level, where most of those costs are incurred. We also need to encourage work. We need to cut runaway government spending. We need to support innovative free market solutions to increase the housing supply in this country, which right now just can't keep up with demand. So the hard truth is that the liberal ideology of the Biden administration And congressional Democrats and what they're doing, it just prevents them from solving this issue. So they talk a good game, but in reality, their failed policies have made it worse for working families. So until we change course away from failed progressivism, which is really regressive, working families will find it harder and harder to afford their daily lives, and it will keep them from becoming homeowners. I yield back.
Gentleman yields back. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. You know, we are increasingly phasing out single-family only zoning, which to me is a policy shift in the right direction. But as we reform zoning codes across America, we have to grapple with the following quandary. How do we reap the benefit of housing development without the cost of housing displacement? You know, land use reform is a necessary but insufficient condition for affordability. And so, Ms. Bailey, what else can be done to ensure deep affordability in the new housing supply that land use reform would unlock?
Thank you for the question. We can actually create programs that are equitable for the frontline workers who actually risk their very lives to save the economy during COVID-19. Families who, through no fault of their own, have been the hardest hit by COVID. So things like first-generation down payment assistance that I already discussed, support for voucher holders, support for people with disabilities, but also the Neighborhood Homes Investment Act. We could actually build 100,000 new units to help these homeowners who have been hardest hit by the Great Recession that robbed $1 trillion from Black and Latino communities. This is a tax credit subsidy, but what we have to do is make sure fair housing is embedded in it. For the entirety of these United States, what we've done is try to create affordable housing without centering it in fairness. When we center it in fairness, like we did with the American Rescue Plan Act's resources, we actually help the families who need the help the most and who have been the most harmfully impacted by this crisis. Going into this crisis, our families were already struggling because of the devastating impact from the Great Recession. They are not equitably sharing in the recovery, and the Fed's efforts have exacerbated inequality to the point that the Black-white wealth gap now is by $20 trillion added.
To your point, you know, home ownership is the foundation for wealth in our society. And contrary to popular opinion, the largest housing program is not LIHTC, it's not Section 8, it's not Section 9 public housing, it's the mortgage interest deduction by far, which disproportionately benefits wealthier, whiter households. I have a question about homelessness. The size of the homeless population depends on the definition of homelessness that one adopts. So take New York City as an example. If you define the homeless population as those living on the streets or in a shelter, there are more than 60,000 homeless people in New York City. But if you define it more broadly to include those doubling up and tripling up, there are more than 100,000 homeless students in the New York City public school system, not to mention hundreds of thousands more who belong to the rest of the household. So how should we define homelessness federally? And do you have a sense of how much larger the homeless population would be if we were to factor in those who are temporarily and unstably housed? Anyone who can answer that question?
I think we absolutely have to expand the definition, and we actually have to think about some of the solutions that worked and the policies that we created for homeless veterans, because we made a tremendous advancement in helping homeless veterans. And if we provided some of those same innovative approaches for families with children, we could actually increase more resources and support to help those children and those families have more sustainability.
And Mr. Zandi, you know, I have colleagues who, you know, romanticize the free market, and the market has its place. The market is a powerful tool, but there are market failures. And in your opinion, do you think the free market is sufficient to create the affordable housing we need at the level of affordability that we need on the scale that we need?
No, I don't. I think the market was significantly impaired in the wake of the housing bust and great financial crisis, and it struggled to get it back together to produce the kind of housing that we need as quickly as we need it. So I do think it is important for lawmakers to focus on ways to try to help address the shortfalls and thus, these ideas around tax credits and also on grants and other forms of subsidy to try to make it less expensive and cheaper for builders to put up more affordable, particularly affordable rental housing units. So no, I don't think we should rely on the market by itself to be able to get us to where we need to go as quickly as we need to get there. This is a problem that's been in the making for over a decade. If we do nothing, it's going to be a problem that we're going to be grappling with for at least another decade or perhaps a generation. So I do think it's really important that lawmakers focus on this and try to address these market failures.
And I'll quickly note, anyone who thinks that we can resolve the affordability crisis without federal investment is living on a different planet. And I'll leave it at that.
The gentleman yields back. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Green, and thanks to Chairwoman Waters and Ranking Member McHenry for holding the hearing today. And thank you to all of our witnesses for being here and taking time to share your expertise with us. I was glad to see that the majority has invited the CFPB Director Chopra to testify later this month, and I would hope that the Chairwoman would also invite SEC Chair Gensler to testify, perhaps as a part of the upcoming FTX hearing. You know, in the last 133 days, we've had only one hearing that included witnesses from the Biden administration, which I believe is a dereliction of our duty as members of Congress to conduct oversight. I hope that changes in a few weeks, and I'm confident that it will, and that we'll be seeing a lot more government officials as witnesses before this committee. Seeing that time is limited, I want to dive straight into my questions. Dr. Holtz-Eakin, earlier this year, we held a hearing on the Biden administration's PAVE task force, which was created based on anecdotal evidence to address discrimination in home appraisals. The task force did not conduct any new research. It also failed to include dissenting opinions on the subject about the contested and limited body of work on appraisal bias. Setting aside whether or not it is wise to make policy decisions based on anecdotal evidence, I am curious about your thoughts on one of the task force's recommendations, which is to require FHA lenders to track usage and outcomes of reconsiderations of value and report it to the FHA so that HUD can evaluate the impact that reconsiderations of value might have on possible discrimination. Dr. Holtz-Eakin, would the costs of increased reporting requirements like this impact the cost of buying a new home?
Certainly those costs will get passed along. There's no question about that.
Dr. Holtz-Eakin, the task force also wants to increase requirements for anti-bias fair housing and fair lending training for all appraisers. The industry itself has been exploring ways to improve diversity among the profession, but one of the barriers to entry as an appraiser commonly cited is the strict training requirements and long hours that it takes to become an appraiser. So Dr. Holtz-Eakin, does increased training requirements make the profession more attractive to prospective appraisers?
I'll have to get back to you with a better answer. I don't really know that industry very well.
Thank you. If you would, I would appreciate it and would welcome your insights there. Dr. Holtz-Eakin, earlier this year, every single Democrat on this committee voted for a bill entitled the Down Payment Towards Equity Act, which would allow even people who make more than $200,000 per year to receive government grants of nearly $100,000 to purchase a home. Setting aside the absurdity of giving individuals who make more than $200,000 in income a six-figure government assistance check, and setting aside the $100 billion price tag of this legislation, Dr. Holtz-Eakin, does increasing the demand for something such as housing but leaving supply constant reduce costs?
No, it'll just exacerbate the pricing problem we see already.
I think so. So earlier, Representative Barr mentioned the conundrum of lowering the cost of regulatory assistance, and you said that it's a pretty big task, and you weren't necessarily sure how we go about that. But if you might expand on that a little, I would appreciate it.
I think this has come up a number of times. Localities have these land use restrictions and construction requirements for a reason. I mean, they value them for reasons both noble and not noble. And you are now going to have some appropriate federal intervention into local decision-making in order to change that. How do you do that? You can try to do it by fiat, but it's awfully hard to tailor that to the circumstances across the country. You can make it a conditional financial assistance and have it as a carrot that they do that. They could ignore that carrot and continue. I think it's a really difficult policy problem to have the federal government trying to influence the decisions being made at local levels across the country.
And is it futile, or do you think it's essential that we try to figure out how to influence those local decisions?
All of the numbers that you've heard today are that this is one of the most significant reasons to have an affordable housing problem in America. So yes, it ought to be looked at.
All right. Thank you. I appreciate it. And I see my time's expired. I yield back.
Gentleman yields back. The gentleman from Massachusetts, Mr. Lynch, who is also the chair of the Task Force on Financial Technology, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank all of the witnesses that are here today. Thank you very much, and the ones who are joining us online as well. I share the representation of the city of Boston, so my situation is quite similar, the same actually as Ms. Presley outlined, where we have, the median rent now is around $3,000 a month for a one-bedroom. I think the average housing cost right now for a single family is somewhere around $770,000, so far above what the national average is. My own background, I grew up in the old colony housing projects in South Boston. At the time, it was among the poorest, predominantly white census tracts in the United States. So we struggled, and my views on housing policy are necessarily shaped by that experience. I saw how my mom and dad struggled. I saw how they had a real hard time raising myself and my 5 sisters, trying to provide a safe place for them, a stable environment. And it seems like things have gotten worse. We were at the very bottom of the economic ladder, and we struggled for housing. But now I see people who are working, who would I think commonly be referred to as middle class, yet because of the exorbitant prices of housing, they're being forced out. I think we had a good start with Hope 6, and I know that Jack Kemp, a Republican, was one of the early architects of that program. Now we have one program that was started by the Obama administration called the Choice Neighborhoods Program that actually tries to build mixed income. One of the problems that I have, and I represent a lot of people in public housing, those same housing projects, it's been renamed the Ann Lynch Homes at Old Colony in memory of my mom. But we still have the same problem. People are struggling. And the new model tries to bring in private money to partner, this Choice Neighborhood Program, to build mixed income, so middle income or workforce, so-called workforce housing. And I'm just wondering, Mr. Holtz-Eakin, we're struggling with this idea of rent control again. The mayor of Boston is looking at it because she doesn't have many options, and I understand that. But I'm old enough to remember the previous iteration of rent control that was a disaster. Mm-hmm. It caused disinvestment and the lack of development of housing. So I just wonder, Mr. Holtz-Eakin and Mr. Zandy, from an economic standpoint, is that the model? Is that the type of model that will succeed if we can, if we can sort of get buy-in from middle income people, as well as those who want to help people at the bottom of the ladder? Is that the model that will succeed in generating this 4 million units of housing that we need to create?
Well, I feel pretty confident that a rent control approach won't solve the problem.
Yeah.
And I say that respectful of the testimony of Mr. Mitchell. I mean, you can probably write down on a blackboard a price stabilization approach that works, but I'd be skeptical that we could make it work in every community in America. So I'd prefer to find ways to get private capital into and increase the access to that cheap capital. I think I'll let Mark speak for himself, but he's talked about that on a number of occasions. And whether it's tax-based incentives that draws that capital in or others, I don't have a religious attachment to any of them. We need to get greater capital in to provide affordable housing. That's the key.
Mr. Zandy?
Yeah, in a long list of things that we can and should do to help these low-income households be able to afford a home, rent stabilization, rent control would be all the way at the bottom of the list. I'd be very, very cautious about going down that path. Very, very difficult to implement in a way that will end up with resulting in more supply. And we need to be focused very carefully on increasing the supply of housing as fast as possible. And rent control, rent stabilization is pretty difficult to implement to make that effective. The other thing I'd say is, there are a lot of landlords out there. There are the institutional landlords, but in many cases, the landlords we're talking about here for these kind of lower income households in these communities that we're trying to help, they're mom and pop. They're middle class households as well. So you need to keep that in mind. So I don't know that I'd go down that path. I'd go down these other paths where I went down the rent stabilization or rent control path.
The gentleman's time has expired. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate you having this hearing. I live in Greenville, South Carolina. I represent Greenville and Spartanburg. We have a major challenge with affordable housing. The city has grown so much. There's been so much people moving into the district. Rents have gone through the roof. Same problems happening all over the country. We have it twice as bad because we also have very poor public transportation. So it really has become a major issue in my district, and I have, like all of you, agree that market forces are not going to solve this problem. The government has to do something. The question then becomes what? Is it to somehow incentivize the developers to invest in affordable units, or is it requiring them, and as some cities have done? Is it creating a fund that will subsidize across the board using general fund tax dollars? Is it deed restricting land to force developers to do it? There's all these different tools in our toolbox, and the question is how. And I think my view on this is that it's a problem when in one building, different units are subsidizing others. So if this is important to us, and it is important to us, it should be general fund dollars. It should be money that the entire citizenry pays to facilitate affordable options in urban areas. But then the other thing is public transportation. I mean, there's certain parts of our country that have grown so expensive, it's just not economical to even make the attempt. So the question is, how do you allow people to move in and out, to have access to areas to work and to enjoy that community? Those are the kind of the two variables that I see. Government intervention to facilitate affordable housing, but also public transportation. Mr. Holtz-Eakin, do you agree that those are two of the biggest kind of levers in this conversation?
Yeah, those are central to this. I would really put the relentless focus on supply of affordable housing that Mark Zandy just mentioned at the forefront, because that will dictate the residential patterns that will be viable over the long term, and thus dictate the transportation networks that you need to have to support those residential patterns. So I think you have to get the housing piece right first before you start thinking about getting the transportation piece.
Do you think it's reasonable that the government should create incentives as opposed to requirements to essentially tell developers that we will make it easier for you to develop, whether it's putting your permit in the front of the line? I mean, right now, permitting is incredibly backed up in South Carolina. because we have so much development. That's going to slow with interest rates increasing. But there's all these different tools. It's not a one-size-fits-all model, and every city is different. So we can all agree that we need to have affordable housing. I guess the question becomes, what tool in the toolbox is the right tool to use to achieve that objective? What do you think the right, and I guess it's very situation specific. What works in Greenville, South Carolina does not work in New York City.
So I think that's the right bottom line, is that we shouldn't presume sitting here in Washington, D.C. to understand the local conditions all around, and we should, permit the flexible use of local tools to get to the objectives. But you do have at the federal level the power to set the objectives and set the targets and try to make sure that we get the outcomes we want.
And I think there's a bigger question of rent versus own. DC has a very complicated system through which you get into a lottery and then you purchase something and you live there and then you only get the benefit of the. I've looked at it extensively. I promise you, I have no idea how it works, but it theoretically works. I think the other challenge is everybody does it differently and there's no best practice. Is that fair?
In my opinion, I've never been able to get excited about rent versus own, and that it's somehow the idea we should get every American into an owner-occupied home. I mean,
we know how that went last time.
We need more affordable housing, rental housing, owner-occupied housing, and people are going to decide whether they want to rent or own. I've both rented and owned in my life. I didn't think I was a worse citizen when I was a renter. I actually thought I continued to uphold my civic duties. So I've never understood the magic whereby we want to pick one over the other. And I would like to just focus on supply of affordable housing.
Sure. In the area that I live, we're having a challenge because the city's growing into an area that was lower income and they were all renters. And so the challenge becomes, is it reasonable to ask them to move? And I would say it's not. If they've lived in somewhere for 20, 30 years, they have a right to continue to live there. So it's a very complicated situation. I don't want to go over. Thank you so much. I yield back, Mr.
Gentleman's
Chairman.
time has expired. The gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. I want to thank you for hosting today's hearing, and to our chairwoman, to our witnesses, thank you as well. Ms. Bailey, this question is for you. In your testimony, one of the key points you make is that GSEs aren't meeting the expectations of their mandate to support affordable housing initiatives. So first, can you specifically tell us more about how the GSEs could be doing better? And second, can you discuss what Congress could do to leverage the GSEs and the federal home loan banks to close the racial home ownership gap and the affordable housing crisis?
Thank you for the question. Absolutely. The GSEs continue to underserve all communities despite a public interest mission to making sure there's broad credit liquidity in every communities at the same time. We support and are pleased with the Federal Housing Finance Agency's recent release of the GSE's Equitable Housing Finance Goals. We've needed things like this for a very long time because of our nation's history of housing discrimination, where we've created equitable opportunities. And in the first 35 years of the FHA Insured program, $120 billion of that program mostly went to white Americans. Less than 2% of those FHA insured mortgage loans went to families of color. So white families had a head start. So we need equitable programs because families of color don't have the resources built up from long-term homeownership that can be passed forward to successive generations. So the Equitable Housing Finance Plans actually implement part of the Equal Credit Opportunity Act's, which has been in place for over 40 years, special purpose credit programs. These are simply programs that allow for lenders to look at their own individual borrowing and to see whom is it that they're underserving, and then to just create a targeted plan to bring in those consumers to make sure they have a fair chance because of the history of discrimination that those communities have faced. We also want to make sure that they affirmatively further fair housing because we've never fully enforced our fair lending laws, and they have an explicit responsibility to affirmatively further fair housing.
Okay, great. Thank you. Thank you so much. So, Ms. Bailey, can you briefly discuss how corporate ownership of housing units at this scale prevents first-time homebuyers from finding housing and what Congress might do to act? In my community, the UNC Charlotte Urban Institute found that corporate landlords own over 11,000 housing units. So can you speak to this?
Sure, 1 out of 7 homes are actually being purchased by investors in the communities hardest hit by the Great Recession in the South and in the Midwest. So we need things like targeted first-generation down payment assistance, which is so different from first-time down payment assistance. This down payment assistance actually targets the families that our former housing policies have kept out. Current first-time home buyer programs are open and available to everyone. So even, wealthier people in high-resource communities could have access to them. By targeting down payment assistance by first generation, we go to those communities that we've left behind in communities all across our country. 1.7 million of those borrowers would be Black, 1.32 million Latino, 1.4 would be white, because again, these are the very communities and rural communities that have been locked out of opportunity for some of the same reasons. And many of these borrowers, up to 88,000, would also be Asian American and Pacific Islander and Native communities. So equitable policies are good for our economy because they help us to bring in the very communities we left out, but they also help to create jobs. A targeted down payment assistance by first generation would help us to generate billions of dollars in local revenues and thousands
Yes,
of
ma'am.
jobs.
Thank you. Let me get in one last question, if you would. Mr. Zandy, can you discuss why the investment in Lightsea is needed now more than ever before? The Light Tech, excuse me.
Yeah.
Because funding and Build Back Better would have provided a lot of relief.
Yeah, it would, and I know you've also worked very diligently on this and trying to make some changes in the funding related to the American Rescue Plan money to allow more light tech development. And I think that's the kind of thing we should be doing. It is the single largest funding source, federal government funding source for affordable rental housing. That is the largest program that the federal government operates. And it's very efficient, it's well understood, tried and true, and I think that's what we should be focused on.
Thank you so much. I'm out of time. Thank you so much, Mr. Chairman. I yield back.
The gentlewoman's time has expired. The gentleman from Wisconsin, Mr. Steele, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you all for being here on another hearing on housing. If I can, with you, Mr. Holtz-Aiken, the Federal Housing Finance Authority, FHFA, announced this week that it's going to increase the maximum conforming loan limit to more than $1 million in high-cost areas, $726,000 in other parts of the country. In other words, the federal government's going to subsidize high-cost, multi-million-dollar, not multi-million-dollar, but million-dollar home purchases. Can you kind of walk us through what the impact of expanding federal support for jumbo mortgages might have, in particular, on inflation?
Well, certainly at this point, as we've discussed extensively, housing is a big part of the inflation story, and it will, increase the demand for housing, and especially expensive housing, jumbo mortgage, finance housing, and other things being the same. Those increases in demand exacerbate the inflation problem. Now, my deep belief is that the Federal Reserve will simply undo it, and so this will be an incredibly ineffective subsidy, which will probably allow these fairly affluent borrowers to get financing and something. Someone else will get crowded out because the Fed really can't allow the aggregate to increase.
Let's follow up there. Somebody else is going to get crowded out. Yeah. Who gets crowded out?
A less
other rich people or lower income people who are trying to buy a home.
Probably the lower income. Like it'll just move down the ladder and they'll get crowded out at the bottom.
So the policies being put forward where the government comes in and intervenes actually hurts the lower income home buyer buying homes not at the $1 million price point, but at the lower price point. It gives me a lot of pause. Let me ask you a follow-up question to that. Do you view that this move could increase the risk to the federal government ultimately being the taxpayers?
Oh, yes. I'm deeply concerned that the GSEs, which were fundamentally involved in the last housing bubble and the financial crisis, remain unaltered to this day. They've been in conservatorship ever since the crisis. They are undercapitalized by their own assessments, and now on a regular basis, they're expanding the credit box to allow riskier and riskier mortgages, which is simply a recipe for eventually those mortgages to fail and for the taxpayer to have to step in on a large scale.
So let's then dig on that deeper, because what we've seen over the past 2 years under one-party Democratic control is aggressive new government spending, $6.8 trillion in new government spending on top of the current operations of the federal government. This reckless spending is, I think, one of the key drivers of the inflation we see. We also have a war on energy. We have labor policies that need to be reformed. But all of that piling in together is, at the same time, the Federal Reserve, with blunt instruments of raising interest rates, is trying to hit the brakes, while the fiscal policy coming out of Congress is exacerbating a problem that we're facing right now. On top of that, the Federal Reserve is engaged in quantitative tightening, pulling liquidity out of the market. How do you think that the quantitative tightening policies that the Fed has indicated they're planning to continue are going to have, in particular, as it relates to the housing market?
I don't think we know the magnitudes. We've never done quantitative tightening, so this is unprecedented. So I can't give you an interest rate equivalent, but
Right.
Directionally, it's pretty clear that there will be other things the same, not as much mortgage capital available to get that capital. They'll have to offer higher returns, which means higher mortgage rates for everyone else, and so this will disproportionately hit the housing sector compared to the overall rate increases.
At what point do you think we'll have additional clarity as to the impact that this quantitative tightening policies are going to have? I agree with you. We saw quantitative easing one time in history. Now we're unwinding this. You have PhD economists that will say, is it the reverse of quantitative easing? It seems like that's a rational analysis. We're seeing some directional indications here. What should policymakers be looking at as it relates to the interest rates, as it relates to housing, as this quantitative tightening process continues down the road?
So, roughly speaking, you do rate increases and you try to look at the impact on real economic activity, particularly business spending, CapEx, things that would be indicators of the potential for a downturn. So that's a general phenomenon.
Mm-hmm.
Compare that to the impact on the real economic activity, the home building and apartment building that goes on in the housing sector, and how quickly the latter goes down and how much more deeply it goes down tells you the QT impact.
Thank you very much. I appreciate your testimony here today. I look forward to 1 month and 2 days from today. We're going to be able to put a check on some of the reckless spending. Mr. Chairman, I yield back.
The gentleman yields back. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Mr. Chair, and I thank all of our witnesses for being here today. I hope you'll excuse my absence. I think you know we're involved in a reorganizational set of meetings as well, but I wanted to be sure to get here. I especially want to thank you, Mrs. Eady, for sharing your personal story with us today. I'm sorry for what you and your husband have been through, but that's kind of hollow words. It is up to us to do better and to do more, and that's why I'm so glad that our chairwoman focuses on affordable housing and homelessness as much as she does. It matters in my district. I have a district, I'm suburban Philadelphia out into rural Pennsylvania, and we struggle with homelessness and affordable housing. And so I'm very pleased to, sad, but pleased to have read your testimony. I want to follow up on something that Mr. Barr asked you earlier, and that it is the benefit of supportive services for people suffering from homelessness. You indicated that supportive services would be helpful for many, and I agree. But I want to follow up on a point that you alluded to in your testimony. Can you explain the importance of having stable, safe housing first as the foundation for your life in order to make other improvements in your life? That is, can you talk about how harmful it can be to coupling a demand for supportive services at the same time as trying to simply get safe housing? Why is it for you that it's foundational, that first you got to get in a safe place?
Thank you for the question.
To me, it'll bring stability for us. Having a safe place to go to every single day without being worried about being harmed while we're being homeless is something that I really it bothers me every single second of the day. So the stability to me in having safe, affordable housing, being able to be in the inside and know that we're safe, and that'll give us more time because in the midst of all of this, my husband had a mental breakdown. So to me right there, him worrying that he has to progressively all the time, go to work, it's not enough money, go to work, maybe we'll make enough to be able to afford the rent. So just being his back to try to not push him to work harder, husband, if I'm saying, but to maybe we can do a little bit more. Maybe you can work a couple of more hours, and then we can put the money towards this, to make us be more stable to get a place. So to me, that is stability. Just having somewhere to live, it'll make us be more stable, to make us be able to wake up every day and have thoughts on we're safe. We don't have to worry about being outside. Now we can get back into the life of things because we have a little bit of stability.
Thank you for that real clarity. And you're absolutely right. It's not just a tax on your physical health, but what a challenge to mental health for any one of us. As you said, you don't know how good it is to have a knob to turn every evening to enter a space where you're safe and not in danger until it's taken away from you. You're absolutely right. You also said being homeless steals your identity. Well, it hasn't stolen yours, nor your husband's. So I thank you for being here today. I wanted to use that point to pivot to monetary policy. If I just have a quick question for two of our economists, and it's really about the Fed and overcorrection for inflation. I wonder, Dr. Zandi and Mr. Mitchell, could you just comment on where you think the Fed should go this month and moving forward in terms of interest rates as it impacts people who are struggling to find housing?
Absolutely. I would actually say that the Fed should put a pause to interest rate hikes immediately. And I would say that in part because as we talk about the underlying factors of inflation right now, none of those things are the things that the Fed can address by raising interest rates.
Yeah.
As other people have mentioned, that it's a blunt tool, and in this moment, it does more harm than good.
And just real quickly, Dr. Zandi? I agree with you, sir, Mr. Mitchell.
I think the Federal Reserve has laid out a path for another percentage point of rate increases. We're at close to 4% on the funds rate. Will be close to 5% by the spring. That's what's embedded in stock prices. That's what's embedded in the current mortgage rate. That's what's embedded in the value of the dollar. They need to execute on that, and then they need to stop and take a look around and make sure that inflation is coming in and that everything is sticking to the script. But I think they need to follow through on the rate increases that they've articulated they will do. If they don't, then we do run the risk of seeing inflation become more entrenched, embedded, and more of a problem.
I thank you, and I know my time has expired. Thank you.
Gentle lady's time has expired. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Chairman, and of course, thank all the witnesses for joining us today to discuss this crucial and timely topic. I represent a working class district, a majority Latino community in Chicagoland. Most of my constituents are renters who have been suffering from rising rent costs. Over the last 5 years, rents have increased by almost 40% nationally, outpacing wage increases. Nearly half of renters and over 80% of extremely low-income renters pay more than 30% of their income toward rent. And this crisis will only get worse if Congress does not act to address it. There are many reasons for the housing affordability crisis. I want to zoom in on one big one that doesn't get enough attention: corporate greed. I recently led a letter asking the FTC and the DOJ to investigate RealPage for anti-competitive practices. RealPage is a multinational company that provides landlords with rent-setting software. It advertises that its customers, quote, outperform the market by 3 to 7%, end of quote. And in some cases, recommends its clients accept lower occupancy rates in order to raise rents and make more money. Mr. Mitchell, can you tell us a bit about RealPage and its rent-setting software, YieldStar?
Absolutely. So as you mentioned, this is a real estate tech company that created a proprietary software called YieldStar. It takes rental market data from various firms, it inputs it into this model, and then it spits out pricing strategies. I think what's most alarming here, and what's the reason that RealPage is now under a DOJ investigation, is that this software is possibly facilitating collusion in the rental market amongst landlords who, in theory, are supposed to be competitors. And this only exacerbates what's already a gross imbalance of power between landlord and a renter. And so I think the other important thing here to know about RealPage is that it acquired its own major competitor back in 2017 in this space, giving it a lot of market concentration and further exacerbating the range of landlords that are using this software in any given locality.
Yes, thank you. And what impact do you think RealPage is having on the rental market, and what do you believe that lawmakers should do in response, if anything?
Absolutely. I think you've lifted up some of the important things here. You know, it eliminates the interaction between landlord and tenant. It takes, so to speak, the pricing decision off-site. It encourages landlords to prioritize high rents and profits over, say, reduced turnover or renter stability. And you know, in certain instances, as you mentioned, it's taking unit stock offline to achieve higher profits. And in these instances, I think it's absolutely imperative that the relevant regulatory bodies are investigating to make sure that antitrust laws, profiteering laws are being adhered to, and renters they aren't at the mercy of colluding landlords.
And RealPage, I want to add, is owned by a private equity firm, and many RealPage's clients are backed by private equity firms. What impact is private equity having on housing affordability, and what could Congress do about it?
Absolutely. So I think there's a few directions we can go here. First and foremost, when we talk about who owns rental property in this country, we oftentimes think of mom and pop landlords. And while that is true, and when we think of the actual properties, if we look about units, we're seeing that institutional investors own a growing and now a majority share. In 2015, it was about 50-50 in terms of units between individual investors and institutional investors. In 2021, latest data that we have, it's actually about 2/3 now institutional investors. And as that becomes the case, I think this supercharges trends that we've seen over the last few years in terms of a continued shift in a heightened prioritization of profits and shareholder return. And you know, we can see this dynamic in the earnings calls where large corporate landlords, many of them backed by private equity, are laser focused on taking every penny possible from renters and driving returns with no regard for the broader health or the stability in the broader rental market. So I think that's really important to focus and understand.
Thank you so much. I wanted to just acknowledge and thank the presence of Ms. Edie. Thank you for your powerful testimony and for being with us today. Homeless service providers are on the front lines of ensuring that people receive support when they need it. These providers are often overworked, underpaid, and understaffed, which means that sometimes people don't get the help that they need. And your testimony here compels us to really think about what kind of services should be provided and funded. Thank you. Mr. Chairman, yield back.
The gentleman's time has expired. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you so much, Mr. Chairman. And thank you to Ms. Margaret Edie for, telling us what needs to be said, which is we need to move with the urgency that is needed for this crisis. I'm also incredibly grateful, Mr. Chair knows this, Chairwoman Waters from day one from the first day I entered into Congress, has said housing is infrastructure. And she reminds us of that every single day. So I'm really grateful for this hearing. I represent Michigan's 13th congressional district. More than half of the owner-occupied single-family homes in my community are valued at less than $100,000. Our state lost more Black homeownership than any other state in the country over the last 2 decades. I know the Urban Institute has found that it's actually more difficult for borrowers to get an FHA mortgage for a home valued at less than $100,000 than for a loan larger than $100,000. Meanwhile, the Urban Institute has also found that 3 in 4 homes priced at or below $100,000 are purchased by all cash buyers and investors. So countless home buyers, particularly first-time home buyers, are being locked out of home ownership in the middle class. And this is hardly a problem exclusive to urban communities like the city of Detroit and so forth. It's Southeast, Texas, and the Great Plains are also seeing a huge impact. And, I worked with Chairwoman Waters and, of course, my amazing colleague, Representative Capter, on creating the Community Restoration and Revitalization Fund and the Build Back Better that directed federal funds towards reinvestment in old or abandoned housing stock across the country and rehabbing them into affordable rental units. Ms. Bailey, can you talk a little bit about how the federal down payment assistance or the creation of a community restoration and revitalization fund helps bridge the homeownership gap and reverse these trends?
Thank you for the question. Indeed, the program would establish a competitive grant program at HUD to support the creation of affordable housing and community redevelopment in neighborhoods that are experiencing blight. We talked earlier about how our communities, including communities like yours in Detroit, have not recovered from the Great Recession. This is why the GSE's equitable housing finance plans are critically important, because what they are doing is providing liquidity for small dollar mortgage programs, those pilots that would allow people in your communities to get access to the mortgage loans that are less than $100,000, the loans that our large-scale lenders are refusing to make despite getting depository insurance. So we need these equitable housing finance programs because whole regions of the country are credit-starved. So we need to do everything that we can to make sure those equitable housing finance plans pass, but we also need the Build Back Better Act. It is a compromise. $150 billion of targeted assistance, including the Community Restoration and Revitalization Fund, would bring much-needed resources into communities all over the country that want to have a stake in an equitable recovery and for whom housing continues to be a challenge. It would generate thousands of jobs to take these actions. So marrying supply and demand together are the solution.
And Ms. Bailey, Mr. Mitchell, Mr. Zandi, do you have any other recommendations in regards to how I can help so many of my families? We're talking about particularly, homes valued at less than $100,000. What are some policy recommendations that you may have for myself, my colleagues in the administration?
Continuing to make sure the equitable housing finance programs are implemented. The GSEs have to do them every 3 years. There needs to be accountability for those plans, so we need to know how they're actually delivering. They have broad public interest mandates for the protections that they get to make sure credit availability is available in every market, not only Fannie Mae and Freddie Mac, but also the Federal Home Loan Banks.
Yeah. Great. Mr. Zandi, really quick, are you concerned about the possibility that the Fed's monetary policy will lead to an even larger home building gap, increasing our shortage of housing and worsening some of the issues and crises that my families are going through in the 13th district?
Yeah, it will. The higher rates, obviously push people into, they can't buy a home because they can't afford it. So they go into rental property, jacks up rents, all else being equal. And also affects lending rates for construction and development. And so that affects the ability of multifamily developers to put up property. So that you got more demand, you got less supply, that pushes up rents. And of course, that hurts everybody. It hurts the renters. They can't, and it hurts homeownership.
I really think the Fed's, the Reserve has taken literally a sledgehammer to the demand with so many sectors working on this issue. Sectors of our economy, but especially housing. I really appreciate this hearing, Mr. Chairman, and I yield.
Thank you very much. The gentlewoman from Texas, Ms. Garcia, who is also the Vice Chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and to all the witnesses. I apologize that I was not here to hear your testimony, but like Ms. Dean mentioned earlier, we were all involved in some organizational leadership elections this morning and were called away. But I'm just so glad we're doing this hearing because I frankly think that we can't really talk enough about the need for affordable housing, not just, in the cities that you have mentioned, but really across America. And I want to first start by thanking you, Ms. Edie, for being here today, for having the courage, having the activism, and for having the voice that you have to speak up and work on these issues for so many people across America. I can tell you that I've been working on this issue since I was a young legal aid lawyer. I represented the Houston Welfare Rights Association, and one of the planks we had then, and it continues today, is getting more affordable public housing. We focused a lot on that, and it always was helpful when we had clients like you that were active and engaged and could speak for others. So thank you for being that voice. And please know that there's many of us in this room and others that support you and hear you and will continue our fight. And of course, you can't find a better champion for all that than our chairwoman, who has pushed and pushed on this issue for years. So the fight will continue, I'm sure. I want to start with you, Ms. Bailey. I'm from a Latino district, 77% Latino, and Latinos were probably the only one ethnic sector that kind of increased its home ownership rate this last year. But it doesn't mean we're there yet either. And I think some of the issues for us are compounded when if you include the unauthorized immigrant in the mix of Latino, that also adds a different subset of issues with some providers and landlords not wanting to lease or rent to people who are unauthorized in this country. So given that Latinos are positioned to be the largest group of home buyers in the nation, I'm concerned of a lot of the barriers to housing affordability that will block their process, because we will continue to grow. We're here to stay. So please share your perspective on the potential that interest hikes will hinder the progress for home buyers of color, and particularly the Latino community, and how can affordability challenges widen the racial gap?
Thank you so much for the question. So as you said, Latinos are going to play a major role in the mortgage market. 7 out of 10 future buyers are going to be people of color, with Latinos accounting for a large majority of those buyers, along with African Americans and Asian Americans and Native communities. So one of the things that we need to do is to make sure the very buyers that the future system depends have access to targeted first-generation down payment assistance as provided in the Down Payment Toward Equity Act that has been a part of the House-passed Build Back Better Act. That targeting of down payment assistance helps to overcome one of the biggest barriers, which is a lack of down payment, because families have not had equitable opportunities to build home ownership over intergenerational times. I like to say today's renters are tomorrow's homeowners. So we have to do everything for homeowners to make sure they have equitable housing opportunities, including making sure there's real support for increasing vouchers, and that HUD gets the resources that it needs to effectively implement its programs, because HUD has been gutted and doesn't have proper staffing
Correct.
to do the fair housing.
Particularly the last administration.
Yes.
Right. Well, recently our major and only newspaper in Houston, the Houston Chronicle, published an article in September highlighting the impacts of inflation on rent prices, demonstrating that prices in Houston are becoming troublingly unaffordable. I mean, I think the article was like, where is our affordable housing in Houston? The average apartment rents in the city have increased by 12% since 2019 to an average of $1,300 per month. Can you speak about the ways that high rents costs can hinder home ownership, and which is an important tool for building wealth, especially for income renters?
They actually stop families from being able to save. But another thing that happens is that in credit scoring, which is typically one of the underwriting criteria, our current credit scoring models don't even factor in positive rental payment history. So what we need is to make sure those credit scoring models actually become more inclusive and factor in that positive history, because when we look at things like positive rental payment history, we actually see that we can expand the credit box for the more than 8 million mortgage-ready Latino and African-American consumers who are ready to enter into the home ownership space.
Thank you. Madam Chair, I yield back. My time is up.
Thank you. The gentleman from Massachusetts, Mr. Auchincloss, who is also the vice chair of the full committee, is now recognized for 5 minutes.
Thank you, Madam Chair, for this hearing and also for your commitment to affordable housing. Mrs. Edie, let me begin by applauding your testimony and for humanizing this issue. In your words, I hear echoes of the thousands of constituents in the Massachusetts 4th, southeastern Massachusetts, and greater Boston who are in panic on a daily basis. Our office is inundated with phone calls, senior citizens, young families, and everyone in between, because we are in a crisis right now in Massachusetts. The cost of housing is our biggest problem, and safe and affordable and dignified housing is a human right. Ms. Bailey and Mr. Mitchell, I want to ask you both a question, and a deliberately challenging question. We have two different threads in our housing policy debate in this country. One thread is housing as investment, a means of building wealth, transferring wealth across generations. The other is housing as affordability. We want housing to be cheaper. The challenge is a good investment goes up in price over time, and an affordable product goes down in price over time. Can we have both of these conversations at the same time? Can we talk about housing as investment, and can we talk about affordable housing and be talking about the same thing, or are they inherently in tension?
Thank you for the question. We can walk and chew gum at the exact same time. We need to do both and. This is an opportunity to use housing as a fundamental right to really stimulate economic growth and grow the economy for everyone. Targeted investments like the Neighborhood Homes Investment Act with inclusion of fair housing protections and oversight will help us to build those 100,000 affordable units in the communities that we've left behind.
Well, let me challenge you on that. And Mr. Mitchell, you can jump in here too. If we add a lot more supply to the market, which I think everybody on this panel agrees that we need to do, wouldn't you expect that the aggregate price of the product is going to go down, or at the very least not go up as much as it has previously, and hence make it a worse investment for wealth building and intergenerational wealth transfer?
So if I just may say one thing, homeownership is important because it allows for families to lock in their monthly housing expenses. That's something that we're not talking about. It means that your landlord can't in the next year cause your rent to increase. So that's one of the things that we have to factor in and pull people in for.
I think more broadly, when we talk about these sorts of investments, what it allows for is for broader economic growth. So if we look at the kinds of investments that were made over the course of the pandemic and the ensuing recovery, we've seen as a result one of the strongest economic recoveries post-recession in modern history. Now, because of those investments, we're seeing jobs growing back, wage growth for the first time for a lot of folks in many decades. And that enables us to then focus on increasing capacity and productive capacity moving into the future. So
we want to add another dimension here. So maybe it's not so much purely about ROI, it's about the inclusivity of economic growth and the stability, to your point, Ms. Bailey, as well, Mrs. Bailey. I appreciate those answers. Thank you. Mr. Holtz-Eakin, let me close with you. I have here a quotation from one of my favorite publications, Strong Towns, and it says, "What we need to do is to improve affordability is something dramatically different. We need to allow the next increment of housing as of right, everywhere. We need to remove barriers to doing small-scale infill so that we can get 1,000 small projects from incremental neighborhood-based developers that proceed with very little fuss and with no organized, mobilized opposition. We need to invite a different kind of developer into the game." Sounds like organic, bottoms-up, community-driven development with the next increment, not these mega mixed-use projects, but ones that are more entrepreneurial and more incremental. You had mentioned carrots and sticks that the federal government might be able to use to incent this kind of development. Say more about those in our final minute, and if you could, add a little bit about parking regulations too, which to me are the antithesis of housing affordability because we subsidize places for cars while making places for humans more expensive.
So that is broadly another strategy on increasing supply, and it's a dramatically different strategy, and I don't see any reason why we should limit the strategies we contemplate. The question is, how do you get there? And there is no reason why any city, locality couldn't just do that. Say, okay,
well, yes, there is, because people like talking about more housing in abstract and don't like talking more housing next to them. I was a city councilor for 5 years. I've seen it.
So I'm going to agree with you. I'm just saying, either the community is going to agree somehow that we are going to take this different strategy, our reservations notwithstanding, and pursue it, or what we had the conversation about is the federal government is somehow going to provide a carrot or a stick to say you have to do this.
We're at time here. I want to invite you, but also everybody else on the panel who may be interested in responding in writing to what specific carrots and sticks the federal government might be able to use to incent the kind of development I described. And I yield back, Madam Chair.
Thank you very much. Without objection, I ask unanimous consent to introduce the following letters. For the record, a coalition letter from 12 real estate industry organizations, including the National Association of Home Builders, the National Association of Realtors, a letter from the National Low Income Housing Coalition, and a letter from the National Community Reinvestment Coalition, all in support of today's hearing and the need for robust, affordable housing investments. I'd like to thank our distinguished witnesses for their testimony here today. And let me just include in this closing that I'm so thankful that all of you are here today and the time that you have spent with us, helping this Congress to understand the need for housing. And Ms. Edie, I want to thank you for sharing with us what has been happening to you and your family. And even though we will not be in charge of this committee, I will be the ranking member, I do believe. And we will not forget that you came here today